gets us to that 3,200 level sooner rather than later.
Earnings have been better than you expected?
Better than expected. I think you're basically seeing some form of troughing taking place in 3Q, stabilization in 4Q, and I think you see a recovery in the first half of 2020.
Too strong to say you're calling a bottom. You're calling a bottom in terms of growth and earnings.
Yes. I think the big call here is on the business cycle. You know, do we see some form of recovery in the business cycle, which has been slowing down in the U.S. and global for the last 18 months? Asia, and specifically when you look at, you know, a lot of the data coming out of China and so forth, I think the second derivative has been improving. Liquidity data has also been quite supportive, largely because of easier monetary conditions. And I think we're sort of at an inflection point, positive inflection point.
You agree, Liz?
I agree that it's positive to see earnings coming in better than expected, but the bar was pretty low. So I don't know that it was going to take much to get there. Unfortunately, we're not going to know if they've bottomed yet until we start getting reports in the next quarter. So some of the positive surprises that I think could take us into breakout phase here are if we see PMIs actually bottom. So if we have PMIs come in and improve this month, if we see GDP surprise to the upside this week, we're getting an advanced number. And if we have an actual tangible trade deal, not just talks about it.
You must be getting more positive, Weiss, based on your buys in the market. If you keep adding to your position in the SMH, that can't be from a position of defense.
No, it isn't. It's from a position of offense. I don't see any tangible bottoming, though, other than hope. And, you know, we haven't gotten a PMI in the last week. But clearly the data's kind of squishy. So time maybe creates the bottom. Maybe it's the unbelievable liquidity, but I think we've also discounted it. So as I look at the market, though, you know, and I was going through the numbers today, over the most recent bull markets extended of 7 to 9 years, you had gains that exceeded what we've had in this 10-year. So the average gain over 2019 to date is 14%, with the market up 150%. If you look at 91 to 99, there's average annual gains 21%. The market doubled. And then if you go back to 82 to 89, you're at 19% with 152%. So we're not so out of line that we can't keep going. I'd also add that interest rates were not as low then as they are now. So I think you've got enough set to take the market higher, but it comes back to trade. And that's what it all turns on, not in the Fed, purely on trade. And right now, they've ratcheted it back for the most part. So the reason why I add is that I think regardless of what the Fed does, if the Fed doesn't go, which nobody's expecting, knee-jerk down, then bounces back up, we've got till November, till the G20, to really dictate what the market will
Jim,
be.
you've been making the argument for as long as I can remember at this point that the market needs a trade deal to break out, right?
Yes.
To take that next leg higher. The market may be saying to you, no, Jim, we actually don't need a full deal. We just need some incremental positives, maybe a bottoming in the economy, earnings picking up, the Fed's going to be helpful, and that's all you need, because the market is trying to tell you something with this move to new highs and perhaps beyond.
Completely agree. So it's been 2 weeks that the sentiment has shifted. It's from the end of the last trade talks. Now, what I want to see is a confirmation of this sentiment in the APEC, Asia-Pacific Economic Cooperation meeting, not G20, just to correct you, Steve. That's mid-November. The two presidents will be there. Let's see a signing of phase one. Okay, phase one, to your point, Scott, is just phase one. There's a lot more to come, but that's a tangible sign that will confirm this sentiment. But let's also just talk about how that sentiment shows up. I know I wasn't on last week. I missed you guys, but Caterpillar, that was an ugly, ugly report. That was about as ugly as it gets, and the stock rallied and has rallied since. That's on the positive going negative. On the positive going positive, you look at Apple. It's going to report tomorrow. That stock is just on fire.
I could point to other industrials that, you know, kind of give you a who cares about Caterpillar.
Or banks.
Right, a Honeywell, UTX.
Sure. Or banks, for instance. I mean, there is a sentiment shift, and it's lovely, and we're all enjoying it. And Steve's optimism and offensiveness, he is offensive, by the way, is based on that. But we really need that confirmation in 2 weeks and a signing of phase ones. Both sides, Chinese and Americans, are saying we're on track. Let's get it done.
I'm not just going to describe why the market has reached all-time highs. It's why it's going to continue to go higher. You've got liquidity, just not here in the U.S., but now globally. The entire global central banking system is providing a tremendous amount of liquidity. When you're looking at pricing and looking at actual asset prices, in the month of October, you had the DAX, you had the emerging markets outperform the S&P. You had a comeback for the Russell once again. October 28th, October 29th, whatever the day might be, that's the day the inversion story died. Inversion is something we heard about in the yield curve for the better part of 2019. Right now, the only part of the yield curve that is inverted is the 3-month to the 2-year. It's basically sitting at -1 basis point. You're about to say goodbye to that. You haven't done that since March. So you have all these conditions that are set up favorably. Then you have an announcement this morning that LVMH is going to pay $14.5 billion for Tiffany. Really? Why? They want to be involved with the U.S. consumer. The story is a strong story. And if you look at positioning, the positioning's not there, suggesting that the market is over its skis, being over allocated to equities.
No, but that part of the positioning point is where they're positioned within equities. You know, Morgan Stanley's Mike Wilson would say, everything you said, that's fine and good, but as his note points out, it's still defensives underneath. That's been the pillar. Staples, utilities, the yield plays. Earnings are weak. No matter how you want to sugarcoat it, with the bar was low, they're better than expected only because expectations were ridiculously low. How do you counter that?
No, look, so first of all, at the market level positioning, we see it still as low, below average. If you look at discretionary hedge funds, be it long, short equity, macro, you're basically looking at some of the lowest positioning we've seen in this cycle. Quants are gradually re-leveraging, but they're still on the lower side of the positioning. And then I think when you look within the market, that's where things are really interesting. We are basically still facing a low vol bubble, a defensive bubble. And in a way that tells you market is pricing in that probably things are not going to get better. So if you get any sort of improvement from current depressed levels, I think market is thinking sort of 2, 3, 4 quarters ahead and not really focusing on 3Q. And that's why I think, just going back to some of these comments and cyclicals, yes, if the results come in slightly better than feared, because leverage levels and positioning is so low in that complex, stocks move higher.
You like tech, industrials, and talk about
energy,
these cyclicals, energy, value, discretionary. You think the consumer still works?
Yes, I like the cyclical side, the deep value side, like energy, industrials, and I also like value within the growthy sectors, like semis, for instance, within tech. That's been an area we've been pushing.
So to your point about sort of where sentiment is, Barron's takes a big money poll. They say bears rise to a 2-decade-plus high. So the narrative is still overwhelmingly, defensive, if not negative in most respects.
Yes, it is. Sentiment is still very negative. Conviction levels are extremely low, amongst investors, and I think that is what creates potential for higher upside if you start to see some of this fundamental or macroeconomic data come through.
But the corporate sentiment, to Jim's point, I think one of the things that's come out over the last couple of weeks has been the earnings reports themselves, not necessarily the numbers, but the sentiment. We hear recession mentioned much less than we were last quarter. It's more slow growth, which, is supportive to a point on the cyclical side. But more than anything else, I think one of the declines that we saw in consumer confidence was related to this decline in corporate confidence that we had seen over the last several quarters. And we're seeing a bit of a reversal of that in the last 2 weeks.
So that's what Goldman says today, is that people are overestimating the recession risk at present. You got yields moving up. Are we about to get off of that narrative of recession? We're worried about growth? Liz?
I think this is really a classic case of do as I say, not as I do. Everybody comes on here, self-included, and says, we don't see a recession coming. Everything seems positive. The consumer is sturdy. Labor is sturdy. Everything seems okay. And even growth is pretty sturdy, and we're going to bottom here. Yet flows are saying that we still want defensives, and clients are asking all over the country, what do I do to protect my portfolio? So I think we have to start getting comfortable with going against that consensus and not following the herd into that defensive posture, because you're going to miss out on everything that's still to come.
It goes also to people being afraid to fully buy in, so to speak, Steve, to what we're doing in the market, because it literally is a potential tweet away of these tariffs are coming in December, and then the whole story's wrecked.
Right. Excuse me. And that creates the opportunity. But putting some numbers on the exposure you talked about, hedge fund net exposure, long short U.S. hedge fund net exposure is in the 13th percentile. That's extremely low. Gross, however, is like the 94th percentile. So they're betting a lot of shorts. And where are they going to short? They're going to short the caterpillars. That's why when you see the quarter come out, you see the stock move up. Earnings are flat. I mean, maybe they're up 2% or 1% without energy, but they're flat. So the market is discounting going out 2, 3, 4 quarters. So the question is, what do you do when you get there? Are we taking that growth in the market from then, bringing it forward? Because right now, the market's lifted on a multiple expansion. It's not lifted on earnings growth or anything like that. So, look, I think it's a window to invest, but that's what keeps people at bay. What keeps people at bay is they expect the dialogue to be worse. They expected the recession talk to continue. And so the hedge funds, it's not only the hedge funds, you see cash levels being high at the long onlys of mutual funds, and to your point, all the questions. But that's the opportunity.
Well, let me bring up this question, because the thing I would hear, let's say 6 to 8 months ago from big money investors, market's too difficult. I don't need to be involved, so I'm not really going to be involved. Can't figure it out. tweet here, tweet there, things move up, things move down. There's no conviction, there's no fundamentals that are driving anything. Are we moving away from that?
Well, let me just say one thing. Here's what's happened, okay? It's like anything else. He tweets so often, okay, and just so regularly that you become immune to it. You're desensitized to it. So it really doesn't mean that much anymore. You know,
a little bit of recent history here helps, and I'm going to rebut your comment about short selling driving the value sector higher, because it was after Labor Day that value caught a bid. Okay, I look at that as a bellwether of value, but look, it was after Labor Day that value caught a bid, and we all rightfully questioned, is that real or not? It gave a little bit back at the end of September, but now it's clearly on. Now, the question, so my point to you is that I think it's fundamental more than short covering, which may have started it in early September. The question is, do the fundamentals end up supporting it? I think we're all around the table here saying this looks a lot like early 2016. We were in an earnings recession. Hey, guess what? 2019 earnings, and you know this, Dubrovko, are flat versus 2018. It's the growth that is to come in 2020 that the market's anticipating. You only get that if you get phase one. If there's a nasty tweet between here and November 15th, this thing could go down pretty quickly.
The question earlier this year was, are we at the end of the cycle? What inning are we in? And everybody thought we're in the 8th or 9th inning. And when you're at that point in the cycle, the market can't decide whether to go up or go down. And then we made it through summer. We had a rough August, and we really didn't get to the end of the cycle. So I think what's getting tired is that end of cycle talk. And all of now this expectation that we might bottom, maybe the cycle lasts longer. And that's where that value and growth rotation kind of, that conversation dies, in my opinion. I don't know why we even really bother with it.
Wait, are you saying that a new cycle doesn't support value? Because that's where it should be supported.
I don't think that there is a huge argument for rotating either into value or into growth.
You're neutral.
I think that value and growth are sector calls. If you're pro-value, you're pro-energy and financials. If you're pro-growth, you're pro-IT, maybe some parts of healthcare.
The Fed certainly wants to prolong the cycle, right, for as long as it can. Is it going to be able to do that, or is it going to screw it up?
No, I think the Fed is acting quite supportive, especially from the view of the financial market.
Is it going to continue to do that, though?
You know, our house view is for, the rate cut this week, as well as one more rate cut later in the year. So basically,
but if you see bottoming, if you see that things have bottomed, why would the Fed then?
No, that's a good question mark. Is it really necessary?
No,
if you have reversal of tariffs, are the rate cuts necessary? So then, if you're getting both, where does the market go?
Dudley writes today in an op-ed, the Fed should cut rates as an insurance policy. I mean, that's the great debate. Now, your 3,200 by the end of the year is at risk if the Fed cuts this week and then pauses?
No, I don't think so. I think, again, trade remains the big topic. So I think if you continue to see trade de-escalation, again, so when you look at corporates, we actually did a very extensive textual analysis based on some machine learning approaches, and recession risk is coming down for sure. But the one big risk that they keep talking about, tariffs, tariffs, tariffs. So if you continue to see softening on the tariff side, and let's say reversal maybe of the list 4A that got implemented September 1st, some talk about that, that's upside for earnings. That's upside for corporates.
So on August 1st, the president began tweeting about the trade tensions, and he continued that for about 6 weeks. And we said the messaging at that point was horrible. It also came at a time when there was no earnings to discuss, and the market basically was in a vacuum of contraction. The impeachment inquiry has taken the president's attention away to a certain extent from continually tweeting about the trade dispute with the Chinese. That's been a positive thing that allows the investor to look at what's mattering most, which is earnings and the recovery that we're seeing outside the U.S. Again, a German 10-year down to negative 32 basis points from negative 78 basis points. What if this de-escalation in tensions with the Chinese is doing what was needed most, which is benefiting the emerging markets, benefiting Europe, and making them slightly investable once again? Because that's where the pain was.
Maybe not slightly investable. There's an argument to make that those are the places that are now more attractive. You still have question marks about what's happening in the U.S. Not that you don't elsewhere, but if you believe there's greater risk reward outside the U.S., do you buy into that in any way?
Yeah, I mean, as a house, our JP Morgan view is we're long Europe, we're long Japan relative to the U.S. U.S. we have more of a neutral view, and that's because, again, Europe and Japan have this cyclical tilt. When you look at S&P 500, there is cyclical components, but a lot of it is also low-vol defensive type exposures.
How do we feel about?
Well, the European market's done what the U.S. market has done this year, right? The MSCI Europe is up 21% also. The positioning, if you talk about positioning, it's more positive in Europe. In Asia, particularly ex-Japan, they just don't short over there, so it's 100% long. So I think there's opportunity there, but if Europe's going to get better, the U.S. is going to get a lot better. So I'd much rather play here because keep in mind the European index they don't have technology to speak of. They have some names, but it's primarily financials and cyclical, as you mentioned. So I'd rather be here with growth. I don't think growth ever loses.
There's also this point, and I think Carl Quintanilla mentioned it earlier, when you have the kind of gains that you've had thus far in a year, you generally have a nice little finish to the year, right? You've got 2 months of trading for all intents and purposes left. Is that what the setup is? This starting to tell you that's what's in the cards?
Yeah, and I actually think, as much as we hear a lot of talk about tariffs, I think the Fed is actually the one thing that could derail this through the end of the year. So I think it's actually incredibly important that we get the positioning from the Fed that we're looking for, because if it's the dollar or it's tariffs, it really is underpinned by the Fed.
So we're going to see what happens this week. You know what the market is expecting. The question is, how does the market react to what it gets? Mike Santoli looking at that for us. Michael, good to see you. What have you prepared for us?
You too, Scott. Yeah, well, first of all, the history is very clear. This year, the last 5 Fed meetings have coincided with a market that was either at a record high or kind of grinding its way toward it. And then it hasn't actually been smart to be positioned much more aggressively at the time of that Fed meeting. You've had occasions for pullbacks from anywhere from 2 to 7%. The 2 stiffest pullbacks this year happened after the May and July meetings, which, guess what? We're in the middle of an earnings season that we all thought were going relatively well. So with that history aside, I do think there are reasons to think that this time we're not as vulnerable going into this meeting on Wednesday for a few reasons. Some of you have hit on. One is the market right now is not implicitly lobbying for an incrementally easier Fed. In other words, we get the cut this time, and if the Fed signals that it's more or less on hold, and this was a 3-cut mid-cycle adjustment, like in 95, like in 98, then I think the market is now better equipped to handle that, whereas a few months ago, mid-cycle adjustment was code for, this is not an open-ending easing cycle, and the market was in the midst of a recession panic and an inverted yield curve situation where it really wanted the Fed to at least act as if it was more urgent in what it was up to. So right now, I think we're okay with that kind of messaging when you have cyclicals performing better and you have yields around the world lifting, and of course the emerging markets and the German equity market breaking out the way they have been. So all that stuff suggests maybe we're better able to handle if, in fact, the Fed says we're not necessarily looking to do a 4th rate cut this year.
People want to take issue with that or agree? Cut, pause. What if I tell you base case, cut, pause?
I love it.
Fine.
I love it.
Great.
I love it.
That's what the market wants.
Take it.
I think it's actually bad if they cut and signal that there's more cuts to come.
The data doesn't support further cuts. I mean, we're starting to see a stabilization in the U.S. data.
But Dudley says, I get you, but just as an insurance policy, why don't we make sure
this will be 3 cuts in 4 months. For a total pivot from where we were last year when 10 months ago, talking about 4 hikes, into 2019.
Does that surprise you, Mike, to hear everybody on the panel say they're cool with that? A cut and a pause?
No, I don't think so.
Know if the broader market is or not.
No, I don't think it's surprising. I think that essentially the market is kind of giving you those indications. I think the Fed is going to try to convey flexibility, as it always would. It's going to talk about the risk and talk about you have these tariffs sitting out there in December. I've been of the opinion that the details of trade matter almost not at all, as long as it's a de-escalation, as long as it's not looking for an excuse to get more aggressive. The market likes when that issue is just set aside. It doesn't have to be a cause for getting much more excited. So I do think it makes sense that people would be okay with that. Like I said, credit markets, for example, have been very, very firm. They're not suggesting that we have a lot of macro stress getting added to the system. And I think the recession panic really peaked about 2 months ago. The real tell, by the way, was the fact that the S&P refused to really buckle in August, when it was an overwhelming, saturating idea that the world was at the very end of a cycle, and the market went down 6.5% and stopped going down.
Well, because we've said repeatedly, even probably around then, the risk and the danger really was being too negative, being short, because the trade deal is always in the White House's pocket. You don't want to be on the other side of that. It's such a meaningful thing, and it has had such a meaningful impact on business sentiment and spending and overall investor psychology. Mike, we appreciate it very much.
All right.
That's Mike Santoli down at the Stock Exchange. All right. Obviously, we started big picture for obvious reasons, right? S&P hits a new all-time intraday high. Let's bring it down to the individual stock level. Go to Josh Lipton, has a news alert for us on another mover today, and it's Apple. Hey, Josh.
Yeah, Scott, some news on Apple. Just now announcing new AirPods, Scott. So these are called AirPods Pro. They will feature noise cancellation, what Apple describes as superior immersive sound. They're going to be available starting today, available in stores beginning Wednesday. The price, Scott, for AirPods Pro, $249. Apple's Phil Schiller saying in a statement here that AirPods are the best-selling headphones in the world. They become a beloved Apple product, and they're now, he says, taking the magic even further. Remember, Scott, Apple does not break out units for AirPods, but analysts estimate they've already sold 50 million and counting. Of course, investors care because they're part of that faster-growing wearables business. Apple's scheduled to report earnings on Wednesday after the close. Scott, back to you.
Josh, thank you for that. Apple hitting another new high today. Price target bumps over at Jefferies, 285, 260 at Bank of America, 275 JPM. 221 is a little offsides at Credit Suisse at this point. They've reiterated their neutral stance on that. But nonetheless, Wednesday, Apple, new product announcement. We were going to talk about this stock irrespective of that. Everybody owns this stock, and it's been on fire, Jim.
It has been on fire. I said a couple of weeks ago, I think this is a clear sailing to 250, 260. It's based on the belief that the new series of iPhones, the pre-orders have gone very much higher than expected. But I think to get above this 250 to 260 range, you're going to actually have to see pre-orders convert to orders during the holiday season. Meaning, there's been a lot of news from the supply chain of, hey, we're getting more orders from Apple. We're really building these things as quick as we can. That's great. That's getting the inventory into the supply chain for when the holiday season hits. Now it really needs to sell. So I think you've got clear sailing until around Thanksgiving, and then you got to really evaluate whether it's above where it should be.
I don't know if I agree with that, because I think Apple is so indicative to your point before, and it might be unfolding, and that's the chase for performance. Mm-hmm. And if you think about
that's a valid point.
There are so many that are underweight Apple right now. Apple is going up. It's defying fundamental reasoning why it's going up. Okay, we've got AirPod Pro coming out. I like that. Sounds good. Steve, will you buy my existing AirPods? No, you probably won't. Who would want those? But the point is this: there's really, you're void of any fundamental catalyst.
It's like you got the ear cooties. What do you?
Right, exactly. That? So you're void of any fundamental catalyst. But this chase for performance, Apple is the classic example. What is it? Is it growth? Is it value? Is it both? It identifies perfectly for portfolio managers, and I think that's why it's so desirable.
I think you're right, by the way. But having said that, at a 19 PE, and I'm thinking about you, Steve, who a couple of years ago called this stock, I mean, many things you called it, but you said, look, it's a consumer electronic manufacturer, shouldn't have more than a 12 times PE. Obviously, it's morphed into more services, which is why it's getting a higher multiple. But at 19 times, I would say that, yes, you are correct. Some of this is a chase for performance, calendar, momentum that is pushing that multiple higher than probably where it should be, say, in February.
Let me wrap it this way. It'll give you the last word. Do you think of things in terms of, I know you like tech, growth versus value tech? Mm-hmm. I know there's a debate over growth and value with Apple, but generally speaking, the Microsofts, the Intels, the stocks that have really outperformed some of those high-flying growth names, do you break it down that way? No, we do. I think like Apple, just one where, again, when we look at a lot of these different sets of analysis, Apple will check the box of growth and value. It will check the box of services and staples. So, yeah, you can look at it. But, I think what's interesting right now, we've been talking a lot about this rotation in the market. The rotation hasn't happened uniformly across all sectors. It's been happening by a decent degree within tech. You look at software versus semis. But then you look at the other side of the spectrum, energy. It's at the bare beginning, right? So, yes, there's definitely, it's not a uniform move across sectors, across industries. Appreciate you being here today, making news and then discussing it on this program. We'll see you soon. That's Dubravko Lekos, JP Morgan. Here's what else is coming up on the half.
Lululemon shares surging almost 70% this year. But are valuations getting stretched? We'll debate in Call of the Day. Plus, Roku's big bounce. Shares up more than 350% this year. And Bank of America thinks it's going even higher. One of our experts owns the stock. We'll debate it straight ahead. The Halftime Report with Scott Wapner and the Traders is back in 2 minutes.
I've always loved a kitchen experiment, especially smoothies. I've blended all sorts of mad combinations. Strawberry and charcoal, broccoli and chocolate. Not my best, that. But when I test blenders in the Witch Lab, it's not about flavour, it's about performance. Our tests use proper tough stuff, hard ice, strong veg, rough nuts. And the blenders that can hack it are the only ones we recommend for your kitchen.
Which tests harder so you can buy smarter. Visit which.co.uk.
London, switch to Vodafone, the UK's best mobile network, and Be Unlimited, because the best phones deserve the best network and our new unlimited data plans. The future is exciting. Ready? Vodafone.
Max download speeds apply to unlimited data. Best network as voted by readers of trusted reviews. Terms at vodafone.co.uk/unlimited.
Hey, it's me again, the TV. Since my family gave me Now TV, there's no more endlessly searching for something they want to watch, because now I don't do filler TV, just killer TV. If my family want reality TV, I can fill that island-shaped hole. Horrors, no problem. It's not real, it's not real, it's not real. Or how about sports? These games are unmissable. Get in. Now they can watch whatever they're in the mood for.
What's your TV got for you tonight? Now TV. 18 plus, month passes auto renew, terms apply.
Hi, I'm back. I just set a personal best on my park run. Feels great.
That's lovely, Mike. I think you've earned the right to put all the bins out.
Hey?
With Vitality Life Insurance, you get properly rewarded when you're active. In fact, you could save over £730 every year in discounts and rewards from our partners. Join over 1 million customers. Just search Vitality Life. Vitality. Positively different. Annual savings available with certain plans and are dependent on members' usage of rewards available. Terms and conditions apply.
Major League Baseball postseason is in full swing, and TuneIn Premium puts you at field level for every.
And it's a home run.
Single.
And gone.
Game.
And that gone, a home run.
With TuneIn Premium, catch every pitch of every inning of every Major League postseason game until the final out of the World Series.
0-2 pitch, little half swing, and it hit.
At home or on the road, Major League Baseball's postseason action is on TuneIn Premium.
And that ball is gone.
Upgrade today.
Welcome back, everyone. I'm Sue Herrera. Here's your CNBC News update at this hour. Treasury Secretary Steven Mnuchin heading a delegation to the Middle East and India to discuss economic ties. He told Israeli leader Benjamin Netanyahu the Trump administration has pledged to increase economic sanctions against Iran.
We are not doing this to hurt the people of Iran. We are doing this so that Iran stops their bad activities and exporting terrorism, looking to create nuclear capabilities and missiles. And we will continue to ramp up more.
A blaze on the west side of Los Angeles erupted before dawn and roared up slopes into wealthy neighborhoods, threatening thousands of homes. Tens of thousands of people were ordered to clear out, including Los Angeles Laker basketball star LeBron James. The American Academy of Pediatricians said there should be more information about artificial sweeteners on food labels. They say there needs to be more research about how artificial sweeteners may impact children's long-term health. You are up to date. That's the news update this hour. Scott, I'll send it back to you.
All right, we appreciate that, Sue. Thank you. Let's talk Lululemon. The shares are slipping from their record closing high as Citi downgrades the stock to neutral from buy, saying markdowns may pressure margins. It's our call of the day. This has been such a darling. Joe, you own it.
I do.
They keep the target at 205, right? They say the stock's at the target, 22.5 times forward earnings. Market expects results to be flawless, and it just has to be too good at this point.
Well, the margin compression would be the concern, and this is a very thoughtful analyst piece. And for someone that owns it, you read it and you say to yourself, yes, if we are going to have margin compression because of accessory, because of outerwear, then I am concerned about the near term. But longer term, that's exactly what you want as a shareholder, Lululemon, to be doing, to diversifying the product away from just yoga and fitness apparel.
At 68% year to date and 22.5 times forward, is it just too rich?
No, I wouldn't say it's too rich. They're going to report earnings on Wednesday, November 27th, so you'll get a better read on that. Listen, if the stock pulls down below 200 into the 190, 195 range, I think that's a buy zone. I think something clearly is wrong. If the stock falls below 180, I think I would put a stop in there. But fundamentally, the growth story and the target in the 5-year plan that Calvin McDonald has laid out, I think, is one that you want to be involved in as an investor. I think you're going to find in apparel very difficult to find metrics and growth that's going to mirror what Lululemon's been able to give you the last
38 times forward, by the way.
I could live with that.
Okay. Give me some Roku, Jim Lebenthal, initiated by at B of A.
Yeah,
154 is the price target there.
Yeah. So, look, there's been two things to go against Roku here. One is competition and the other is valuation. I think at this point, competition, you got to take that off the table, as the analyst does. For one thing, the fact that they've got Apple on their platform is a way of co-opting competition. You look at their results, and they're just blowing away Comcast or anyone else who's got a similar product. So take competition off the table. This is a fabulous company. The problem of valuation remains. This is a very expensive company that's doing great things. That's why I only own a little bit of it, Scott. And frankly, look, I may at some point be eating humble pie on this, and you'll serve it up and say, hey, Jimmy, you cooked it, you get to eat it. That's true. But what I'm doing here is nibbling at it. I've been nibbling at it. If it comes down, I'll buy a little more because this company is doing great. The valuation just remains an issue.
I think this is endemic of the market where valuation really doesn't matter. I mean, I own Illumina. I'm final trading Friday. I could justify the valuation, even though it's got a niche business and growing pretty well. So the market's just ignoring valuation. It's going through momentum.
In select cases.
In select cases, true. Actually, momentum has been sold for the most part over the last month, particularly by hedge funds, if you look at the numbers. But so I think it's okay. So until they slip up, the market continues to be rewarded.
Sorry, I'm going to accent that point, until they slip up. So they'll have earnings in a couple of weeks. If something goes wrong there, you're going to see this thing drop like a stone. And we'll talk about it then if that happens, Scott. But if the fundamental story changes and the company isn't doing as great as I think they are doing, then I might change my position. But right now, I do love the company, and the valuation, I'm just getting used to it.
Okay. I'd love Lulu to miss. I'd love them to miss big. Yeah. Because I'd love to buy it. I sold it very early.
All right. Coming up, two sectors in the spotlight for today's ETF Edge. Consumer discretionary on the back of Amazon's lower than expected sales outlook. Plus Virgin Galactic's big debut. We're going to take a look at the aerospace and defense sectors when we come back on The Half.
London, switch to Vodafone, the UK's best mobile network, and be unlimited, because the best phones deserve the best network and our new unlimited data plans. The future is exciting. Ready? Vodafone.
Max download speeds apply to unlimited data. Best network as voted by readers of trusted reviews. Terms at vodafone.co.uk/unlimited.
Otto Sergey now checks for better energy deals so you don't have to. Meaning we can all sit back and relax. Can't we, Sergey? Sergey? What? Tell the people that we can sit back and relax.
Oh, we can sit back and relax.
Oh, don't waste energy worrying about energy. Automate it with Otto Sergey. Compare the market. Keep life simple.
Customer preferences determine alerts based on tariff type, payment type, supplier rating, and minimum annual saving of £50.
Hey, it's me again, the TV. Since my family gave me Now TV, there's no more endlessly searching for something they want to watch, because now I don't do filler TV, just killer TV. If my family want horrors, no problem. It's not real, it's not real, it's not real. Documentaries, I got ones about space, sharks, or superstars. Or how about sports? These games are unmissable. Get in. Now they can watch whatever they're in the mood for.
What's your TV got for you tonight? Now TV. 18 plus, month passes auto renew, terms apply.
Hey NFL fans, can't watch the game? Can't be there? No biggie. With your TuneIn Premium membership, you have unlimited access to every team and every game in the league. Listen live as it happens or on demand. Anytime, anywhere. All season long. Search NFL today.
Deep left center field. A grand slam!
October baseball is here, and TuneIn Premium is your ticket to the 2019 MLB postseason. Featuring the home and away feeds for every game, TuneIn Premium delivers every call of the ALCS, NLCS, and the 2019 World Series through the voices of the local radio broadcast teams.
In the air, left field and deep. He's at the wall.
Now until a new champion is crowned, hear every play of the 2019 MLB postseason live on TuneIn Premium. Upgrade today.
ESPN Radio and TuneIn just go hand in hand. Hi, this is Mel Kiper Jr. reminding you that all of your favorite ESPN Radio shows and events are right here on TuneIn. Just search ESPN Radio to begin enjoying it today.
In the dictionary, a podcast is this: a digital audio file made available on the internet, typically as a series, of which new installments can be received by subscribers automatically. But on TuneIn, a podcast is this.
I'm Adam Grant, and this is Work Life, my podcast with Ted.
I study how to make work not suck.
And it's defined like this.
Blackout is a suspense-filled thriller from Endeavor Audio and Q-Code.
From news, sports, to pop culture, comedy, and beyond. Define your own podcast possibilities on TuneIn.
And welcome back to the Halftime Report. I'm Bob Pisani. Time for ETF Edge. First space company has gone public, Virgin Galactic, Sir Richard Branson's space tourism company, listing on the New York Stock Exchange this morning, giving aerospace and defense ETFs a boost. Let's break this down with Marianne Bartels. She's the head of ETF strategy at Bank of America Merrill Lynch Global Research, and Tim Seymour, founder and CIO of Seymour Asset Management. Marianne, on top of the interest in space, a lot of support for defense spending in general, and that's benefiting aerospace this year. Your thoughts?
Well, we're very bullish on defense. Defense works well in a slowing economy. It works well during a presidential election. It's not sensitive to credit or consumption. So we're actually very bullish on defense.
And Tim, there's a lot of ETFs that are catering to the space crowd. The biggest one, ITA, is up, Marianne, 27% so far this year on the back of Boeing. Although the problem, of course, Boeing is 20% more of that. Obviously, Boeing's not well. What's your thoughts on where Boeing's going?
Well, my view is Boeing is the analyst community has been slow to actually look towards the fourth quarter to reset where they're going to be on the MAX and where we get back. Probably 50 MAX are produced in the first quarter is my view. This was a great free cash flow story, but as Marion's talking about, the defense sector is really outperformed. And if you look at a Raytheon, it's up almost 50% off of those lows in December. I'd say the entire sector is re-rating a bit, and it is a bit of an all-weather investment approach.
Bob, you really have to be careful. Not all ETFs are the same. And I know you know this, but I think it's important for the audience to know this. If, for example, you did want to have exposure to Boeing, if you owned ITA, you would get 20%. But if you owned Invesco's PPA, you'd only get 6%. And if you owned FXD, you would get 0%.
The problem I had with that ITA, that big aerospace ETF, is 50% of it is 5 stocks. Essentially, you're owning Boeing, United Tech, Lockheed Martin, and Raytheon. I just think that's a little bit of a problem for the overall group. Hey, let me just ask you about space. They're trying to repurpose the interest in space into ETFs. We've got a bunch of them this year. There's the ROKT. This is the Kensho Final Frontier ETF. It's up also about 27%. You're still buying into these aerospace giants that are out there right now. This is what the new one is out there, this ROKT. There's another one if you want to buy into satellites, though, that just started recently. This is another way to attack the space program. Procure Space ETF. The symbol is UFO. I love that one. And you're owning satellites. Intelsat, essentially, you're owning. They believe that this is the best backdoor way to play space.
Well, and we saw this even in the mobile phone and the cellular industry buying the towers themselves. But so if you buy the infrastructure and the picks and the shovels, it's a great way to do it. Exciting day. Exciting to see the private sector and innovation doing what it's doing. Whether it's a meaningful part of the revenues in this ETF, it's hard for me to know. But clearly that's what we're building for.
Just exciting to see Branson, Musk, and Bezos take us into space.
Absolutely.
That's what I'm all about. Tim and Marianne, thanks very much for joining me. More ETF Edge. Don't move a muscle. Our live online show starts at 1 p.m. Eastern Time. We'll reveal the best performing ETFs of the year. Talk ETF efficiency with Lynn Martin of the Intercontinental Exchange. Scotty, back to you.
Okay, Bob, we appreciate it. And we're ready to answer your questions next. To go to cnbc.com/halftime. You can tweet us as well. We're back in 30 seconds.
London, switch to Vodafone, the UK's best mobile network, and V Unlimited, because the best phones deserve the best network and our new unlimited data plans. The future is exciting. Ready? Vodafone.
Max download speeds apply to unlimited data. Best network as voted by readers of trusted reviews. Terms at vodafone.co.uk/unlimited.
Big day for stocks, hitting new record highs, and now we're answering your questions. First up, Joe, to you. You heard Dubravko talk about energy. Ben in San Francisco wants to know about the stocks within the space that you like.
So I have Hess, HES. I bought that last week. I also have ONEOK, OKE. That's my energy exposure. I do think positioning is light in the energy sector. and I think that could work to the advantage of putting on some length here through year's end.
Okay, Jimmy, Bob in Michigan, are you still bullish Cleveland Cliffs?
I am. Two opportunities here. Number one, the stock got hit hard after August 1st with the tweets about new tariffs. Since then, China-U.S. trade issues have gotten better, but the stock hasn't fully recovered. That's your first opportunity. Second opportunity is the hot briquetted iron plant that's opening in Toledo in just a few months. That's going to propel their earnings higher. Now, if anyone's out there saying, hey, I don't like this stock because of iron ore pricing, you're missing the picture. Focus on the first two things that I said. It's a good stock to own.
Yes, sir.
We're all thinking the same thing sitting here. I mean, like,
I'm trying. Scott always says what I
Just trying to give
Shannon.
the information.
Adam in Ontario. I can go on, right? Yeah?
Please, continue.
Thank you, sir. Adam in Ontario, Shannon, for you on Intel.
Yeah, Intel's
Good earnings, big move. What now?
Yeah, it's performed pretty well. We're going to continue to hear about, share loss to AMD, which can obviously compress profitability for this stock. So I don't know if I would sell out of the full position here, but trimming it here because it will be positively correlated with an upside move in the equity market, which we've talked about today. But definitely a trim here is probably warranted.
All right, Liz, from Mike in New York, how about going long the VIX?
I would never call the VIX your primary moneymaker. However, don't see it going much lower from here and probably do expect more frequent spikes in volatility. So it's an okay play as a satellite.
Okay. Weiss from David in New Jersey. Hey.
Hey.
Kind of in New Jersey sometimes,
yeah.
right?
Yeah.
What's your opinion on Baba?
So,
I mean, not that he needs your opinion, generally speaking, but
again, you say the things that we're all thinking.
I bought it Friday. So the stock's bounced off the 150, 156 level off the lows, but I don't think it is really reflective of what could happen with the trade deal. So that's why I bought it. I also thought it was, you're getting to that season where you want to own these stocks. I think it's a great trade here.
Okay. Coming up. Biotech bouncing back over the past few weeks, and there is one name that should be on your watch list. It could make some big news today. It could move big up or down. We're going to tell you what it is. But first, Kelly Evans has a look at what's coming up on the exchange. Hey, Kel.
Hi, Scott. Yeah, we're going to talk about deals, direct listings, and no recession talk. Is this the start of the next leg higher for the bull market? We'll debate that. Plus, with LVMH courting Tiffany, is the retail sector primed for a wave of consolidation? We'll look at how the landscape could be shifting and who might be next. And Alphabet is reportedly in talks to buy Fitbit, but is that a good fit? That's coming up in Rapid Fire today. I will see you for that. The halftime report is back after this.
London, switch to Vodafone, the UK's best mobile network, and Be Unlimited, because the best phones deserve the best network and our new unlimited data plans. The future is exciting. Ready? Vodafone.
Max download speeds apply to unlimited data. Best network as voted by readers of trusted reviews. Terms at vodafone.co.uk/unlimited.
Here at LNER, we love giving you more value. And we all love more, don't we? More sleep, more sun, more me time. So we've added our new Azuma trains with more seats and more great value fares. In fact, there are 3,773 more £29 single tickets every week on our Azuma trains between London and Leeds. Brilliant. Book direct at lner.co.uk, launching alongside existing LNER trains.
With the new Halifax Family Boost mortgage, children can get help to buy their first home, and mum and dad earn interest on their savings. Everyone's a winner. The new Halifax Family Boost mortgage. Halifax makes it happen.
Your home and savings could be at risk if mortgage repayments are not maintained. Only available in England and Wales. One applicant must hold a Halifax Reward or Ultimate Reward current account. Conditions and exclusions apply.
Hello? This is Dustin. I found something. Is anybody there?
We hear you, Dustin. With Sky Q, you can easily catch up on epic Netflix shows like Stranger Things and then watch award-winning Sky originals like Chernobyl. Get Sky and Netflix all in one place on Sky Q for one surprisingly low price. Just £25 a month. Visit sky.com and join today. Offer ends November 14th. 18-month minimum terms. Prices may change during contract. Requires Sky Q box connected to broadband. Set up from £20. Further terms apply.
Hurry to TradePoint. 3 for 2 on flooring and tiles ends this Sunday. Plus, if you have loyalty discount, you'll get this on top. Don't miss 3 for 2 on flooring and tiles at TradePoint. Excludes cut-to-measure flooring, flooring accessories and underlay. Every third item per single transaction in descending price order free. See tradepoint.co.uk.
Hey NFL fans, can't watch the game? Can't be there? No biggie. With your TuneIn Premium membership, you have unlimited access to every team and every game in the league. Listen live as it happens or on demand. Anytime, anywhere. All season long. Search NFL today.
Deep left center field. A grand slam!
October baseball is here, and TuneIn Premium is your ticket to the 2019 MLB postseason. Featuring the home and away feeds for every game, TuneIn Premium delivers every call of the ALCS, NLCS, and the 2019 World Series through the voices of the local radio broadcast teams.
In the air, left field and deep. He's at the wall.
Now until a new champion is crowned, hear every play of the 2019 MLB postseason live on TuneIn Premium. Upgrade today.
Big day for biotech. Mirati Therapeutics set to release new cancer data after the bell today, and analysts have high hopes for that stock. It's already up 90% this year. Our Meg Terrell is here with more. We're talking as you sat down. I said this thing could move a lot up or down depending on what these results are.
That's right, Scott. So it's kind of a classic biotech David and Goliath story. Mirati has a market value of about $3 billion. So, of course, in this tale, it is the David. And the Goliath is Amgen, which has a competing cancer drug going after the same target. It's so closely watched by Wall Street because this is a very exciting target in the cancer research community. It's called KRAS, and it's implicated in a number of different kinds of cancer, including lung cancer. Amgen has already presented some data on its drug, including going back to the big cancer conference ASCO in June, and Mirati is traded on reactions to that data. Now today, after the bell, we get the first look at Mirati's own drug out of the cancer research conference going on right now in Boston. And analysts say the stock could swing widely based on what we see. Leerink has the biggest range, guys, predicting the stock could move up 70% or down 60% at the extremes. Now to get up that high, Leerink says the drug would have to appear superior to Amgen's, and in the worst case, of course, the drug wouldn't work or would have safety issues. But many I'm speaking to say they expect something in the middle. Jared Holtz at Jefferies says the company's been articulating more caution coming into the event in terms of how many patients will actually be included in the update. So, guys, it could be a lot less conclusive than many would hope.
Yeah, you know this name? You follow it?
I only because it's up so much. I haven't gotten involved in it. I was looking at the options. There's nothing that trades, but looking at the 80 calls expiring November 15th, they're $11.50. That means you've got to get to $93 just to break even in a short period of time. Of course, you'll get there tonight or you won't. So it's really binary. Even if
as many of these things are.
Exactly.
Right? I mean, you've played some of these names before. You know as well as anybody how binary it is.
Yeah, I tend to be ones where it's not bet the company on the result, where there are other drugs in the channel. So you may get a sell-off. You will get a sell-off, but at least you can come back. But they typically trade down to cash when they have one product and they miss.
I'm glad you mentioned the options. We have Pete Najarian from Minneapolis joining us now. What do you see with the options market ahead of the data? Have you seen a bunch of trades, Pete?
Yeah, there is a lot of trading, Scott. As a matter of fact, one of the things that Meg just mentioned was some of the swings that are the expectations, talking about 60 or 70%. The options don't reflect that, but the options are reflecting a reaction that's going to be something that pushes it at least 30% up or down. That's what they're telling us right now, because when you add all of that up, Scott, the 80 calls that Steve was referencing, the 80 calls and the 80 puts, you're talking about $20+. That's the expected move going into this number. If you go back to June, that's when Amgen came out, and that's when the stock went from 105 down to the levels where it is right now. So a positive result is something that the options are reflecting right now. And the reason I say that is about 500 total puts so far today have traded. Almost everything in November. If you look at the calls, almost everything in November, about 10,000 calls. Now cut that in half, because what we're seeing is very smart style trades where you're buying and then selling multiple strikes up above. And when you're doing that, you're giving yourself a little bit of a hedge so you don't have quite quite as much exposure. So the 105-125 call spread, that was pretty big. The 115 to the 150, that was pretty big. I participated in this as well because I like the risk reward. If you can buy one option and sell one at an incredible premium to the upside, that cuts down on the exposure going into this number. And I think if you return towards those numbers back in June and July, this could really be something special. But it's absolutely the call activity way outweighing anything we're seeing in puts today.
I'm going to get back to you in just a second with two other unusuals. Sure. First, though, Meg, you wrap it up for us. I mean, the space in general, all we hear about political headwinds, pricing headwinds. How are investors feeling these days about these stocks?
Not great. I mean, the drug pricing headwinds going into the election, that is going to be an overhang until we know who the president is. And then afterwards, I mean, it's not an issue that's going anywhere. So people don't feel great about biotech just in general. But when you have opportunities like these, where it's a cancer drug that could potentially really work, and for a small company like this, it's binary, it is a big opportunity, but it's a huge risk as well if the data don't look as good as people hope.
You're up more than 10% on the XBI just over the last month, so
a little better.
You get some sentiment better.
All right. We will see you after the bell with that news. We'll look forward to that. Meg Terrell. All right, Pete, back to you. A couple of unusual activity plays for us. What do you got?
Yeah. We had a really good one not long ago in Bed Bath & Beyond, and that a lot had to do with, I think, a short squeeze that was going on. We're looking at Abercrombie today. The November 18 calls were being bought for about, call it 32 cents. Nearly 2,700 of those were trading on the day. Pretty active, and we're expecting, once again, look at this short interest there, Scott. That might be another one of these names that I think we get a squeeze to the upside with any kind of positive news. So because of that, I'm in these calls, and I'll be in there until the November expiration. I like this very great risk-reward that we've got in front of us there. I think that's awesome. We also have some activity. We heard Jimmy talking about Cleveland Cliffs earlier. I would give you Vale, and this one's pretty interesting as well because they're aggressively, they bought over 10,000 or 7,800 of the December 14 calls. So these are decently out of the money. They're very inexpensive. 9 and 10 cents is what they were trading for. But if this stock starts to move to the upside, like a Freeport, like some of these other names, these options really could start to work. So I bought these as well. I like what we're seeing there. We got a lot of paper in the FXI, a lot in the EEM, all very bullish. So there's something going on that's absolutely affecting, I think, some of these miners and some of these metals. That's going to be something to watch in the next couple of weeks.
Appreciate it. Pete, we'll see you back here. Thank you.
Thanks, man.
All right, that's Pete Najarian.
Look forward to it.
Yep, we do as well. All right, FANG earnings on deck. Just a few hours to trade ahead of Alphabet's results. We'll go around the desk. We'll get your final trades for you as well. Straight ahead on the half.
Why is Lizzie going rental for Fizzy Haze? Is it because her flat is so beautiful and spacious? Snazzy! Or has roof terrace, garden and party room? Surprising! Or because it's 18 minutes to Paddington? Easy! With friendly staff on hand to take any deliveries? Amazing! Or just because her fuzzy friend can live there too? Find your new home at fizzyhaze.com. Fizzy Living, reinventing renting.
When it comes to keeping your small business valuable information safe, Dell Small Business Technology Advisors can recommend tailored security solutions like computers with Intel Core processors, servers, storage, networking, plus industry-leading monitors and software. Running your own small business is a big challenge, but with the right partner, it's a lot easier. To speak with an advisor today, call 0800 085 4878. That's 0800 085 4878.
Fall in love with the brand new iPhone 11 at Tesco Mobile. Take amazing photos with Apple's best ever ultra-wide lens camera. You can get the iPhone 11 for just $37.75 a month with no additional upfront costs. What's not to love? Search Tesco Mobile or visit us in store. Tesco Mobile. Every little helps.
36-month credit agreement, rolling monthly usage contract. Subject to status, phase policy applies. See tescomobile.com/terms.
Trick or treat!
Oh, sorry, this is a Vauxhall Network Q retailer.
But your sign says no tricks, just treats.
Well, yeah. Treats like a £1,000 deposit contribution on an approved used SUV at 9.9% APR representative.
I'm telling my mum.
Well, get her to hurry. Offer ends on November the 4th. And don't forget our 1-year warranty and roadside assist. No tricks, just treats. Search Network Q. Because buying a used car shouldn't be scary. Personal contract purchase, subject to status, T's and C's apply. 18 plus only, Vauxhall Finance.
Hey, it's me again, the TV. Since my family gave me Now TV, there's no more endlessly searching for something they want to watch, because now I don't do filler TV, just killer TV. If my family want horrors, no problem. It's not real, it's not real, it's not real. Movies, I've got blockbusters. Or how about comedy? Coming up, way better than the dad jokes in this house. Now they can watch whatever they're in the mood for.
What's your TV got for you tonight? Now TV. 18 plus, month passes auto renew, terms apply.
Online now. Beyond Meat earnings after the bell. The stock down 30% this month. Read Lizzie Gertis's article on the key level to watch from here. Go to tradingnation.cnbc.com now.
Welcome back. Alphabet reports after the bell. Let's get some trades ahead of that. Jim owns it. Shannon owns it. Weiss owns it. Shannon, you're first.
I'm looking forward to getting some information both about the cloud and about ad revenue. I mean, we talked earlier about the Microsoft win on Jedi, and with Twitter's miss last week, I think it's going to be really interesting to see ad revenue, but I think this is going to be a good report.
Weiss.
I feel the same way. I'm hoping they picked up share from Twitter and from other places, as has been each quarter, but I'm hoping that the spend isn't outsized so that the stock trades up instead of down despite reporting great revenue growth.
We showed you two trades there. We showed you Fitbit as well on this report that Google's taken a look at Fitbit. That stock reportedly there's Fitbit for you, up 24%. Just wanted to make sure you knew why we showed you that.
I think it's about the buyback. I mean, we've discussed that on the show over the last 3 months, the increase in the buyback, finally adhering to some of the capital allocation strategies that have worked for Apple. I think it's working right here for Alphabet. I think that's why you're seeing investors clamor for it.
If they do buy Fitbit, that could mean they're going more into healthcare, which would be a positive area of growth.
All right, let's hit AT&T quickly just before we go. Mixed results. They come out with a 3-year plan, a lot of which Elliott was clamoring for, so it gets the activist off its back a little bit. You own the stock, Shan.
Yeah, we sold Verizon to buy this probably about a year and a half ago, and I think that this is going to unlock some value. I think AT&T is muddled between content and delivery, and I think this will help to better articulate their message.
I would agree with that. I think this will close the gap between AT&T and Verizon. I'm going to stay with Verizon.
You still prefer Verizon? I
still prefer Verizon because I like the partnerships in terms of content instead of the acquisition model that AT&T has adopted. But AT&T is clearly taking the right steps, and you're seeing, and I can see AT&T continue to outperform over Verizon.
Okay, let's do some final trades. All right, Liz Young, you're up first.
Communication sector fixed income. It's a nice way to play that triple B space, and a few names on track to upgrade.
Okay. Mr. Weiss.
Adobe. So Adobe's had a tough time really bouncing back. It's come back a little bit. I think it's put it in a bottom, so I do that. You can buy it really cheap if you sell in November 8, 270 calls, which are like $6.
How do you feel about software stocks in general?
I like them. I mean, Microsoft's what I own. I own this one. I don't really own many others. I mean, or any others. That's just it. So
okay, Shan.
AbbVie reports on Friday. We think the Allergan transaction is actually going to be very positive for the stock, and so we like it.
Farmer Jim?
General Motors, and I'm thinking, like, do I really want to step in front of earnings tomorrow and make this my final trade? I do, because I'm going back to the start of the show. Remember, Caterpillar had an awful quarter, right, and yet rallied higher. This is going to be an awful quarter for General Motors. That strike is going to cost them billions, but it's over. And they can be positive on the commentary going forward. So I think tactically it's a good final trade. Long term, I've always liked this for potentially what the cruise division can be, autonomous vehicles. That's the long-term position here.
Stocks, what, down 10% in 3 months?
It was doing fine, and this strike kind of screwed things up. It's over now. Let's move forward.
Okay. Joey?
MKS Instruments, MKSI is the ticker symbol. That's a semi-equipment small cap name off of Lam Research's strong results.
All right, good stuff. Dow's up about 75. Good to see everybody. Thanks for watching. The Exchange with Kelly begins now.
Thank you, Scott. Hi, everybody. Here's what's ahead. Deals and more deals. LVMH makes a surprise bid for Tiffany, and the street likes it. Could it open the floodgates for retail M&A? And could it go beyond retail to a bigger deal wave? We'll discuss that. plus 5 key days. As the S&P hits new highs, investors have a full docket. The busiest week of earnings, the Fed decision Wednesday, and the mighty jobs report Friday. We've got your game plan and a look at the early winners ahead. And are we seeing the death of the duopoly in the IPO world, an Apple triple play, and the revival of 2 troubled tech stocks? That's all ahead in Rapid Fire today. But we begin with the record-breaking rally. Dom Chu has the numbers for us.
All right, that record-breaking rally is still in effect because we did hit a record intraday high on the S&P 500 right after the opening bell. And as you can see here, solidly above that old mark, which is 3,027. 3027 was there. Now we're solidly higher above that. But for the Dow Industrials, at least, we've given up more than half of the gains that we've seen so far today. So we'll see if that momentum slowdown continues. But still, green across the board for the major indices. One place that is outperforming, and the bulls might be happy about this, is the small cap stocks. Now, this is the Vanguard Russell 2000 Index Fund, the ticker VTWO. As you can see here, that particular fund is up 1%. The Dow, remember, only up about 1/4% at this stage. So remember, that move higher, it's playing catch up. We'll see if the bulls can cling on to that. And then the stock of the day so far, and it's breaking news just in the last couple of hours, Fitbit shares off its highs, but still up 23% on the day. Now, just for some context, go all the way back to its post-IPO highs. This was a massive stock over here. Remember, it's lost about 90% of its value since its IPO. At one point, Kelly, it was a almost $11 billion stock. Today, it's worth about $1.5 to $2 billion. Keep that in mind. And also, Kel, about 13% of these shares at Fitbit are held by short sellers. So we'll see if that squeeze is part of that story. Back over to you.
And it is a great story. We're going to have more on that soon, Dom. Thanks very much. Welcome to the exchange, everyone. I'm Kelly Evans, and the rally is on as the S&P 500 hits that fresh all-time intraday high Dom told you about. The Dow and NASDAQ less than 1% from their records. Meanwhile, we have a bunch of deal talk. LVMH and Tiffany's, Fitbit and Alphabet, and Prologis and Liberty Property. And if that's not enough, Virgin Galactic is moving higher in its public debut today. Are all these bullish signs for the market? Joining me now are CNBC's Bob Bassani, along with Jerry Castellini, who's Chief Investment Officer at Castle Ark Management. It's great to have you both here. Jerry, we asked the question because when things look this good in some ways, investors get a little nervous. They say, well, we've got deals and we've got IPOs of companies that barely have a business and we have all-time highs. Would you be fading the move today, or does it please you?
Actually, I feel good, and I think we're just getting started, quite frankly. There's 3 important points to look at as an index, or in this case, a broad move upwards eclipses an old high. And the most important thing is the fact that we're worried about it in the first place. If you could go back in the early years of this rally, people would celebrate each time you made a new high. Now it's more a time of questioning. And number 2, you can see that in portfolio positioning. People still own utilities, defensives, and other things that reflect a caution on the part. Mm-hmm. And in spite of the fact there's a handful of these IPOs, broadly, most of the names, and particularly the cyclicals, are still acting as though that a recession is very close and nearby. And that's just not a sign of enthusiasm or over optimism.
Would you be an owner of the cyclicals here, Jerry?
Absolutely.
Okay.
You go through, you think, first of all, the financials. There's no question these are cheap valuations they've been at, and the balance sheets, particularly the big banks, is best they've ever been.
Okay.
You look at industrials that have been slaughtered by the entire trade war conversation, along with Brexit and the slowdown in economies. I mean, those are good, solid companies. And look at the way they're reacting just in the last week to mediocre earnings. The stocks are now pushing forward, which suggests there is something better coming.
Right. And Bob, oh, yeah, I'm sorry, Jerry, finish your thought.
Oh, no, the last one is energy. The energy stocks are trading as though the price of oil is going to go drop to $25 or $30, and there's just so little evidence for that. The stocks are yielding 4, 5, 6% in some cases. I mean, this is a wonderful opportunity to look at these things.
Okay, and Bob, I think Jerry kind of hits those points well here. It's interesting to look at the market today, and you have the value ETF at all-time intraday highs, the financials, like he mentioned, but you also have the semiconductors and tech. Yeah. Those are some pretty odd bedfellows.
semiconductors are the engine of global growth, but the market's been very defensive. So why are we at new highs? Trade talk optimism, the Fed's cutting rates for the third time this week. I think most importantly, consumers holding up well. I just reviewed the transcript of all 40% of the companies that have reported so far. Kelly, it's remarkable how many say the U.S. consumer is holding up well, and I specifically look for recession talk. I didn't see any of it. Here's very typical. CEO of Zions Bank Corp. We don't see any indications of a broad-based recession on the horizon. We heard that many times. So I think the market's comfortable with slightly slower growth next year, maybe 1 to 2% GDP, flat to 5% earnings growth, but no talk of a recession, and that's the key, and I agree with Jerry.
And Jerry, just so everybody, we showed your picks, but just so everyone hears them, they include Valero, JP Morgan, Caterpillar, and Apple. Any others that you'd put up there in that basket?
Well, the names I gave you, I think is for somebody who has still some lingering doubts. So if you want to play the breakout, take the big names. Take the names that might not go up 20% in 3 months, but these are the leader names as we come into this. So take the best of class and the most consistent performers. You can go down into more volatile names underneath them. But right now, why don't we lean into this as we break through by owning the better names and the more consistent performers in their sectors?
Yeah, Apple's been at an all-time high for over a week now, hitting it day after day after day. JP Morgan up there, too. Guys, thank you both. Appreciate it. Jerry Castellini and Bob Pisani talking about these markets.
Thank you.
Now let's talk about one of the biggest deals. Louis Vuitton and Tiffany are talking about tying the knot. Shares of the jewelry retailer are soaring after they received a takeover bid from LVMH. The offer was worth $120 a share. That's a 22% premium to Friday's closing price, but it's well below Tiffany's all-time high. The announcement came as a bit of a surprise, and if it moves forward, could it trigger a wave of consolidation in the retail sector? Joining me now are CNBC's Courtney Reagan, along with Susan Anderson, who is senior research analyst at B. Riley FBR. Susan, so first of all, does the Tiffany price need to move up a lot higher for this deal to get done?
Well, yeah, I don't cover Tiffany, but I think we are seeing a lot of these retailers that offers have been made at. They're just not willing to accept these prices. They know that their stock is undervalued at this point. A lot of them have gone down with the rest of the retail group. And so I think a lot of them still believe they're worth a lot more than some of these offers are being made for.
Are they in denial, Susan? Or, is it reasonable to think, look, if this is a price I've traded at within the past year or so, then I should be getting a premium to that?
Yeah, I think it depends on who you're looking at. Some other ones where Sycamore has made offers at would be Taylor's brands or Chico's. And those were pretty dirt cheap offers, just over $3 for Chico's brands, which a couple years ago traded in the high teens. So I think that it depends on who you're looking at, but a lot of these where there's not really a bankruptcy in sight or there's no reason to sell, and they know that eventually consolidation will happen in retail and valuations will come back, I think it makes sense to sit back and try and get a higher valuation.
And Courtney, it's interesting that Tiffany's is the takeover name we're talking about, because while they're certainly kind of in transition, they're not one of the beaten down retail stocks of which there are plenty to pick from. I wonder, as we think of through more consolidation, is it likely to take out the stronger candidates or the weaker ones?
I think it sort of all depends. I know that's not an easy answer, but it depends on what the portfolios are needed to look like when you're talking about the acquiring company and what they're looking to build. Look, you have these sort of American premium houses. I wouldn't call them luxury when you're looking at a name like Tapestry or Capri Holdings, but they're trying to build up their portfolios too. I don't think Tiffany necessarily fits with them. It does seem to make a lot of sense to me for an LVMH. That is a luxury brand that is looking to sort of build out its jewelry business a little bit more, and particularly with a name that's very U.S. focused. So I think Susan's right. It's all going to depend on the circumstances and the retailer. I think, of course, some of the weaker players, it may make sense to sort of team up. Then on the flip side, if you look at a stronger player like a Tiffany, it doesn't really have to sell if it doesn't want to. And we're talking about the price. And if the reports are true that $120 per share was offered, then it was undervalued because it's at $129 right now.
That's right. And 141 was its recent high. Susan, you do cover names like Gap and L Brands. Are these companies, and you've described this as the retail apocalypse playing out here. So how would more consolidation figure into the end game here?
Yeah. Well, I think with a lot of these with multiple formats, we could also see breakups, right? We saw Gap now spinning off Old Navy. Potentially, L Brands could spin off BBW. I think it's a way for them to get the value out of their stock that they feel they deserve. And with that, so I think you could see breakups, but then it makes it easier for someone else to come in and buy parts of these companies where they may not want the whole company, but they may want a part of the company. Also, I think it makes it tough because all these guys have so many stores. So we're seeing a lot of private equity pick up, bankrupt companies where they can pick and choose which stores they want.
So for your coverage universe, are there stocks you'd recommend on consolidation or on a breakup wave, or is what you're describing that we could have a whole rejuggling, I guess you'd call, in terms of the ownership and the portfolios of the major retail names that emerge here?
Yeah. The space that we like that's benefiting right now from consolidation is the children's space. We had Gymboree fully shut down earlier this year, Toys R Us last year. A number of department stores shut doors or go bankrupt, which is really benefiting players like Children's Place or Carter's. They're benefiting from just fewer players out there. So those are two names that we like. And then we also like L Brands for the value play. We value just the BBW format itself at $34, which is well above where it's trading. And I really don't think that VS is worth zero. So, LB, I think, is a longer-term play. We have to see that one play out, and potentially you get the value out with a spinoff. But I think that a lot of these are undervalued right now.
That's super interesting. So some consolidation, some breakups, and the kids' space is winning by losing participants, I guess. Guys, thank you both. Appreciate it.
Thanks.
Joining me today, Susan Anderson and our own Courtney Reagan. Here's what else is coming up on the exchange.
Ahead, Beyond Belief. After soaring post-IPO, Beyond Meat has seen its gains cut nearly in half. Will tonight's earnings get the former high flyer back on track? Plus, the California wildfires rage on, and the governor is now asking for one big investor to help deal with one of the biggest issues, PG&E. And the second largest mortgage lender in the country tells us what's ahead for the housing market. This is The Exchange on CNBC.
Growing a business is tough.
Why is Lizzie going rental for Fizzy Haze? Is it because her flat is so beautiful and spacious? Snazzy! Or has roof terrace, garden and party room? Surprising! Or because it's 18 minutes to Paddington? Easy! With friendly staff on hand to take any deliveries. Amazing! Or just because her fuzzy friend can live there too? Find your new home at fizzyhaze.com. Fizzy Living, reinventing renting.
Fall in love with the brand new iPhone 11 at Tesco Mobile. Take amazing photos with Apple's best ever ultra-wide lens camera. You can get the iPhone 11 for just $37.75 a month with no additional upfront costs. What's not to love? Search Tesco Mobile or visit us in store. Tesco Mobile. Every little helps.
36-month credit agreement, rolling monthly usage contract. Subject to status, phase policy applies. See tescomobile.com/terms.
Hey, it's me again, the TV. Since my family gave me Now TV, there's no more endlessly searching for something they want to watch, because now I don't do filler TV, just killer TV. If my family want crime dramas, I've got loads, and they're never going to guess who did it. Horrors, no problem. It's not real, it's not real, it's not real. Or how about documentaries? I've got ones about space, sharks, or superstars. Now they can watch whatever they're in the mood for.
What's your TV got for you tonight? Now TV. 18 plus, month passes auto renew, terms apply.
Deep left center field, a grand slam!
October baseball is here, and TuneIn Premium is your ticket to the 2019 MLB postseason. Featuring the home and away feeds for every game, TuneIn Premium delivers every call of the ALCS, NLCS, and the 2019 World Series through the voices of the local radio broadcast teams.
In the air, left field and deep. He's at the wall!
Now until a new champion is crowned, hear every play of the 2019 MLB postseason live on TuneIn Premium. Upgrade today. Hey NFL fans, can't watch the game? Can't be there? No biggie. With your TuneIn Premium membership, you have unlimited access to every team and every game in the league. Listen live as it happens or on demand. Anytime, anywhere. All season long. Search NFL today.
Welcome back. Beyond Meat is the best performing IPO of 2019, still more than quadrupling since going public. But the company is getting ready to report earnings after the bell, and concerns are rising. The stock is down 54% from its all-time highs this summer, and investors have been selling ahead of the lockup expiration date, which is tomorrow. Joining me now is John Baumgartner. He's a senior equity analyst with Wells Fargo Securities, and our own Leslie Picker, who's been following this for us as well. John, first to you quickly, what are your expectations for the earnings tonight, or lack thereof? Are they going to post earnings tonight?
Well, we think revenue will be pretty strong. They've been increasing production capacity. They've doubled their points of distribution, both in food service, and in retail over the past year. So we look for about a 200% increase in year-on-year revenue growth tonight, and even 50% in 2020. So we think the revenue momentum is pretty strong.
And you have sort of a market perform, an equal weight on these shares. Explain to someone how you can justify their valuation here.
It's really hard. I mean, it's not your typical food company. It's more of a tech stock. It trades 16 times revenue, which is double that of Netflix and Facebook. So there's a lot of secular growth built into the valuation here. And we think part of our concern is just competition popping up in the short term. From larger food companies getting involved in the space, and also on the processing and ingredient side over the medium and long term. We don't think this will be a linear growth. There'll be some bumps along the way. So we are more cautious on valuation.
Okay, Leslie, we also have this big lockup hanging over the stock, and investors have been concerned about it for weeks. We did see the shares go below 100. Presumably, they're trying to price in a lot of this before it actually happens. But how much of the float could hit the market tomorrow, and what's the expectation around that?
So 48.8 million shares are eligible to hit the market tomorrow. That's about 81% of the float, according to Renaissance Capital. Now, of course, as these lockup expirations happen, not every investor will sell, not even close. It's usually a small fraction of investors who are looking to capitalize on some of the recent gains since the IPO. That said, it is notable that the 54% decline has taken place since it reached its July peak, because a lot of that is people selling into this lockup expiration. We see this pretty much with every IPO, that people do tend to sell the weeks leading up to that calendar event. And then studies have actually found that following that calendar event, it may dip tomorrow once the lockup expiration actually happens, but following that calendar event, the shares do tend to rise a little bit after that. So some of the air has come out at this point in time. Right. We may see that, that big overhang.
Would there be, after we move through tomorrow's lockup date, would there be another catalyst like that on the horizon, or is this kind of the main hurdle in terms of the IPO process to get through?
This is the main hurdle. Some companies do have, stair-step lockup expirations. Alibaba had one of those just because that deal was so big they needed to kind of stagger it out a little bit. But this is their main lockup expiration date. Another thing worth noting that's kind of more technical in nature with this one is that almost 50% of their shares are out on borrow to be sold short.
Wow.
So any kind of upside surprise that they get from earnings today could send that stock higher yet again, or it could bring even more short sellers into the mix.
Or whether it's earnings or the lockup period or any positive news, you can see why the stock might be so primed to move higher, John, even though it's down so much from its peak. A lot of people will compare Beyond Meat to some of the high-flying cannabis stocks, for example, other areas where we've seen this intense exuberance followed by the stocks ultimately dropping 80 or 90%. What makes you think that Beyond Meat will be different and able to kind of level out here as opposed to falling further?
Well, I think a lot's going to hinge on the competitive environment. I mean, already just in the last couple of months, we're seeing, Conagra, Tyson, a few large food companies coming into the space with plant-based offerings of their own. There's a lot of questions about the pricing, on the shelf for this category. In food service, Tim Hortons in Canada has already scaled back Beyond Meat to just Ontario and British Columbia. So, I think a lot of it's going to hinge on just the scarcity value, that this is the only publicly traded, pure play in plant meat out there. And also, demand from, ESG and socially responsible investment funds, kind of underpinning the valuation, married against what the competitive constraints really are.
And I see that your more preferred names would be the Silk owner, Nomad, Danone. Those, if people want exposure to this space.
Yeah, I mean, we like Nomad in the plant-based beverages space. It's already close to a $2 billion category for them. We think over the next 5 years, plant-based will drive about 40% of their total net revenue growth. It's a global story. It's not just in the U.S. market. That's the old white wave brands, Silk and Sodalish. So we prefer that for, plant-based exposure.
All right, and they're, again, Beyond Meat hovering just above $100 today with these two major events looming. Thank you both. Appreciate it. John Baumgartner and our Leslie Picker. Coming up, the world's king of luxury is courting Tiffany, and he wants to put a ring on it. A closer look at what LVMH's Bernard Arnault would get out of this acquisition. Plus, getting into multiple stores with one bird, Allbirds, that is, the retailer expanding its physical footprint. Good idea in this day and age? The CEO joins us live. And take a look at some of today's all-time highs. You've heard about JP Morgan and Apple already, but also the tech names, Microsoft, Lam Research, United Technologies in there as well. We're back in 2.
There's something for everybody this Halloween at Aldi. Dead good sweets, decorations, face paints. Be afraid. Be very afraid to miss out on these shockingly low prices. In store now. Everybody get to Aldi for an amazing Halloween.
Halloween's back. London, switch to Vodafone, the UK's best mobile network, and be unlimited, because the best phones deserve the best network and our new unlimited data plans. The future is exciting. Ready? Vodafone.
Max download speeds apply to unlimited data. Best network as voted by readers of trusted reviews. Terms at vodafone.co.uk/unlimited.
Hello? This is Dustin. I found something. Is anybody there?
We hear you, Dustin. With Sky Q, you can easily catch up on epic Netflix shows like Stranger Things and then watch award-winning Sky originals like Chernobyl. Get Sky and Netflix all in one place on Sky Q for one surprisingly low price. Just £25 a month. Visit sky.com and join today. Offer ends November 14th. 18-month minimum terms. Prices may change during contract. Requires Sky Q box connected to broadband. Set up from £20. Further terms apply.
Watford, there's nothing like coming back to a warm home after a long day at work. Especially when you've been stuck at a cold train station in rush hour for what seems like an eternity. Luckily, with Hive Active Heating, rated 5-star on Trustpilot, you can turn your heating on from wherever you are. And now with our new Hive radiator valves, you can even control your heating room by room. Search Hive Heating to buy now. Hive services require broadband and Wi-Fi. Terms apply.
Swinging a long drive, left field. He's got one now. Kurt Suzuki gives the Nationals the lead.
The excitement of the Fall Classic is here, and you can hear every call of the 2019 World Series on TuneIn Premium. The action continues this Tuesday with Game 6 between the NL champion Washington Nationals and American League champion Houston Astros. Listen live at 8 Eastern as two of Major League Baseball's most storied franchises look to bring home the World Series title. The 2019 World Series is on TuneIn Premium.
Touchdown, Minnesota. Grabbed by heavily covered. Dives into the end zone for the touchdown.
Tonight, TuneIn has your Monday night NFL football with the Miami Dolphins at the Pittsburgh Steelers. Kickoff at 8:15 p.m. Eastern.
Quick throw out to the side. Taysom Hill across the goal line. Touchdown.
But Robbie's got it airborne. Robbie Gold's field goal is good.
At home or on the go, hear the home and away call of every NFL game this season on TuneIn Premium. Upgrade today.
Welcome back to The Exchange. California's governor declaring a state of emergency as high winds are fueling multiple wildfires that continue to ravage parts of the state. Millions are without power now. Hundreds of structures have been damaged, and more than 162,000 acres have already been burned. Jane Wells is in Healdsburg, California, with the very latest for us. Jane, what do you see?
Well, I see a completely destroyed winery, but if you look at the vineyards almost act as a fire break in this area when that happens. But if you come around here, this winery, Soda Rock, is a complete loss. One of the almost 100 structures destroyed in the Kincaid fire, which has now doubled overnight. But I have to tell you, the news now is another fire down south on the west side of Los Angeles and Brentwood along the 405, one of the most congested freeways in a congested city. Wealthy residents like LeBron James and Arnold Schwarzenegger were forced to run for their homes before dawn.
This is a fire that quickly spread. It is now over 500 acres, but we luckily had a lot of amazing heroes that were in our fire stations who rolled out immediately. We have over 500 firefighters that are on the line right now in some of the most challenging topography of Los Angeles.
It's amazing. So far, nobody has died in these fires, but this is such a California story. The LA Times ran into a guy who was trying to flee that Brentwood fire, didn't know what to do. He said, quote, "I am trying to figure out what to do with my Ferrari." Meantime, it's not clearly these power outages are not preventing all fires, but are they preventing some? We don't know. Here's a map on the northern part of the state of all the PG&E power outages right now affecting more than 2 million people, and that's going to continue. And down south, Southern California, Edison says this is his current outages. Those could increase to potentially over 300,000 more people as the winds pick up again. And take a quick look at how both stocks are performing today. Edison reports earnings tomorrow after the bell, and PG&E, which is bankrupt, Kelly, will report earnings a week from today before the bell. Back to you.
Yeah, Jane, it's tragic that these power outages, which are costing millions, aren't even preventing the fires. But like you said, it's tough to disentangle cause and effect right now, too. You mentioned LeBron, and it caught everybody's attention. He, just before about 4 a.m. local time, said, had to emergency evacuate my house, and I've been driving around with my family trying to get rooms. No luck so far. And then about 20 minutes later said they finally found a place to accommodate us. If the biggest star in the world is having trouble getting a hotel room, what's everybody else doing?
LeBron, that I think was a little bit tongue-in-cheek. I mean, come on, you walk into any room, any hotel, anywhere in the world, and you're LeBron James, they're going to, kick me out of my room and give it to him. But it's just, we really don't know what has caused. This fire may have been caused by a power line, but many fires may have been prevented by these de-energizing. I just want to point out one thing, Kelly. Look, these trees right behind me were burned, but you can see this whole place was destroyed. And look at those trees back there, right by the power lines, which were turned off. Those power lines were turned off, and those trees are as green, and the houses back there, untouched. Fire is such a weird thing, very difficult to predict, though they're spending all this money trying to figure it out.
Yeah, no, and we're going to continue following it, see what as I said, a lot of the losses are now that this is becoming more routine and more tragic. Thanks, Jane. We really appreciate it for now. Jane Wells in Healdsburg, California for us. Now over to Sue Herrera for a CNBC News Update. Hi, Sue.
Hello, Kelly. Hello, everyone. Here's what's happening at this hour. Former Deputy National Security Advisor Charles Kupperman did not appear for a scheduled deposition this morning in the House impeachment inquiry. Kupperman has asked a federal judge whether he should comply with the congressional subpoena or the White House order that he not testify. Congressman Adam Schiff calls his absence unfortunate.
He was compelled to appear by a lawful congressional subpoena. Just within the last few days, of course, the district court has ruled that the impeachment inquiry is perfectly valid. Witnesses like Dr. Kupperman need to do their duty and show up.
Iraqi police firing tear gas to disperse thousands of protesters in Baghdad, where planned anti-government demonstrations have resumed after a 3-week hiatus. Young Iraqi students joined the protests for the first time, calling for reforms and also regime change. And the world's oldest natural pearl has been put on display at the Louvre Museum's location on the Persian Gulf. Archaeologists estimate that pearl is more than 7,600 years old. The gem was discovered about 2 years ago on an island just off the coast of Abu Dhabi. You are up to date, Kelly. That's the news update this hour. Back to you.
All right, Sue, thank you very much. Sue Herrera. Here's what else is ahead of us on the exchange.
The Apple Triple Play. Price target hikes, earnings, and Apple TV is just 5 days away. Investors are betting that space will pay off. The world's king of luxury wants even more luxury. And going against the grain. The CEO of Allbirds on why they're actually opening more physical stores. He'll join us.
I want more.
There's something for everybody this Halloween at Aldi. Dead good sweets, decorations, face paints. Be afraid. Be very afraid to miss out on these shockingly low prices. In store now. Everybody get to Aldi for an amazing Halloween.
Halloween's back, alright.
Hey, it's me again, the TV. Since my family gave me Now TV, there's no more endlessly searching for something they want to watch, because now I don't do filler TV, just killer TV. If my family want crime dramas, I've got loads, and they're never going to guess who did it. Documentaries, I got ones about space, sharks, or superstars. Or how about comedy? Coming up, way better than the dad jokes in this house. Now they can watch whatever they're in the mood for.
What's your TV got for you tonight? Now TV. 18 plus, month passes auto renew, terms apply.
Your new neighbour is a musician. His creative peak is at 3 a.m. They're doing roadworks next to your house. Your dog thinks he's a wolf at night. There's always a reason to travel. Fly with Lufthansa's incredible fares around the world. For example, to Bangkok, Shanghai, or Singapore. Book now on Lufthansa.com. Conditions apply.
Say yes to the world. Lufthansa.
Deep left center field. A grand slam!
October baseball is here, and TuneIn Premium is your ticket to the 2019 MLB postseason. Featuring the home and away feeds for every game, TuneIn Premium delivers every call of the ALCS, NLCS, and the 2019 World Series through the voices of the local radio broadcast teams.
In the air, left field and deep. He's at the wall.
Now until a new champion is crowned, hear every play of the 2019 MLB postseason live on TuneIn Premium. Upgrade today.
Hi, this is Brian Weber, host of NFL First and Goal every Sunday, kicking off at 1 Eastern only on TuneIn Premium. Be sure to listen this Sunday for the ultimate football fan experience, featuring 7 hours of commercial-free coverage of every scoring play around the NFL.
At home or on the go, stay up to date on the latest news and political trends with Fox's full lineup of shows. Plus, when news breaks, Fox has you covered with live updates and expert analysis on the biggest developing stories. Listen to Fox News Talk anytime on TuneIn.
Welcome back. Let's catch you up on a few stories that should be on your radar on this Monday. It is time for Rapid Fire. Here to break down the headlines are Dom Chu, Rahel Solomon, and Robert Frank. Welcome, everybody. First up, a ton of news on Apple, and like I said, it's only Monday. The company is set to report its earnings Wednesday after the bell, and its highly anticipated Apple TV Plus begins streaming on Friday. Ahead of all this, JP Morgan, Bank of America, Jefferies, Credit Suisse, and Evercore, 5 firms all raised their price target on the company in the past 24 hours. Then we have news, according to sources, that Apple is looking to renovate its smart home business. And I think they launched some new AirPods today.
Yeah.
And this is my favorite, the stock has hit an all-time high every trading day since October 16th. Wow.
What can you say about it, I guess? So what I love about this story is the idea that everyone's taking up their price targets. The ratings, for the most part, have maintained. They've all been the same. But what's curious about it is the research reports you read, and many of them cite channel checks for the iPhone 11. Like, you know, they kind of survey retailers, they survey kind of the stores out there. They count the number of customers going in. They want to see what the dynamic is like for those phones. I have probably seen just as many bullish channel checks as I've seen more bearish ones, or ones that say that maybe those estimates are a little bit too high.
It's sort of split?
So all these price targets are going up, even though I'm seeing the prevailing narrative become maybe almost neutral with regard to whether or not people are very bullish going into the holiday season for iPhone 11 sales, or whether or not they're a little bit more tempered about their expectations.
And maybe just not a decline is the new up for Apple. I mean, you look at, to your point, all these revenue estimates are calling for flat revenue and declining earnings. So what other stocks would get such a lift on, well, it's not so bad. But again, Apple's sort of this debate over Apple is, are they no longer an innovative company, or are they, and therefore are they going to fall into disrepair, or are they going to continue innovating? I don't think it's either of those, but I think investors are happy if they can maintain and add a little bit on the 11.
Well, quickly on that point, we've been talking about how FANG has not been so momentum-y at all lately. It's all still well below their high, because the actual original FANG does not include Apple. It's just FANG. Ironically, Apple's now the new FANG to some extent is the fact that it's a value stock. Look at it's next to JP Morgan every day in the all-time highs list. We talked about this today. You have the value ETF at intraday highs. You have tech up there, semiconductor. Is Apple benefited by the fact that it's kind of seen as a value stock?
So here's what I would say. I mean, Apple is technically still a technology stock, but if you look at the communication services stocks, which encompass most of the FANG names, the top 3 communication services stocks over the last 12 months, they're cable companies or satellite companies. They're not Google. They're not Alphabet. They're not Facebook. It literally is Charter. It literally is AT&T and Comcast, the parent company of this network. So to your point about the value side of things, there has been a tilt more towards that over the course of this past year-to-date period, and it's playing out with that.
One last thing to note about the quarter, the iPhone 11 only accounts for about a little over a week of this quarter. So
of the current
of the next
the previous quarter that they're going to
announce on Wednesday, right? So what we really need to know about the iPhone 11 is the following quarter, the end of our year quarter.
Holiday shopping
season. So this doesn't really tell us much about the 11 in this quarter.
All right, we'll see if they say anything about it in the earnings. But the funny thing is, which introduces the next piece, all of this is happening, so this is sort of odd bedfellows thing, on a day when Sir Richard Branson's Virgin Galactic went public today. This is the space tourism company, and at last check, it was trading above its opening price. So instead of tangling with the IPO process, they're instead doing a direct listing with the help of Chamath Palihapitiya. His firm, Social Capital, has a special purpose acquisition. Anyway, a SPAC. See, Morgan Brennan sat down with Chamath and asked him about the decision to go this route instead of the traditional IPO process. And here's what he said about that this morning.
I think these kinds of transactions and processes are the future. And I think a lot of that traditional oligopoly or, monopoly run by Morgan and Goldman are probably, those days are numbered.
That is what caught my ear today, yes.
It's a bold statement. I think for companies that have a lot of name recognition, that are big brands and don't need the cash, there is a certain appeal. Exactly.
And when you have Richard Branson.
Exactly. Huge founder, right? But for smaller companies that don't necessarily have that name recognition, it's a little trickier.
And the IPO process itself becomes a marketing vehicle.
Exactly.
Which has been part of the way that, look at Zoom. They literally cited this, said we've won business not only because of the marketing around our public offering and how well it did, but from the underwriters themselves. They got them to try the product and adopt it.
I would say technology has enabled a lot of this, and I don't just say it kind of cliche-ish. I mean the idea that you can get a message out there, you can tell a story without having to do the traditional type of roadshow where you pitch a pitch book to investors, try to get them to buy on this whole process. If you do have a situation where your name is out there, you can get your story out there to investors and build hype, then a direct listing, maybe a SPAC type situation works. If you cannot, though, you still need banks to sell that share of stuff to their clients, and that's what the banks like Goldman and Morgan are there for.
And I think he's right in that this whole role of the banks as the toll takers, which they've served a lot of different roles that are now declining. I think this is another area where the banks just can't any longer insert themselves just because, take a huge fee, and say you need us because you need us.
Yeah, no, and I agree. I think this is absolutely the place to watch, especially if this continues to trade well. Meantime, some excitement in the luxury retail space today. The French luxury conglomerate LVMH approached Tiffany with a $14.5 billion all-cash bid. It values Tiffany around $120 a share, and LVMH is controlled by Bernard Arnault. I can never get it off my tongue, Robert, who has been thought of as the world's king of luxury, one of the wealthiest men on the planet. This is very savvy because it's below Tiffany's 52-week high. What do you think he's after here?
Well, if you ask most Americans who is the third richest man in the world, they would probably say Warren Buffett or Mark Zuckerberg or someone like that. No one would say Bernard Arnault because they can't pronounce it.
That's how it's pronounced.
Because they don't know who he is. But this is a guy who took a bankrupt textile company and has turned it into a $200 billion dominant player in luxury. He is so good at
huge number, $200 billion.
$200 billion company. And what he's so good at is disciplined acquisitions of luxury brands that are sort of the top or well-respected in their space, and then executing those around the world through expanding the brand, collaborations with designers, just great execution, and his incredible relationship in China, which Tiffany is struggling with, and that's the source of their problems right now.
That is super interesting because people have said maybe Tiffany made sort of double down on China at the wrong time with the Hong Kong exposure and the rest of it.
It's not that they doubled down at the wrong time. They were late, and they also had the wrong approach, which was we're going to serve the Chinese in Europe and in the U.S. when they come to visit. Well, guess what? Chinese are buying all their stuff in China now. So Tiffany has 35 stores. It's not enough. It wasn't fast enough. Arnault could ramp up that growth and really execute.
So here's what I would say. So what's curious about this deal is Bernard Arnault, in his history of making these acquisitions, has always been very closely focused on the brand and the family aspect of his business. He likes having he considers all of his employees family. And if you're
some
looking,
of them are.
Yeah, you're right, exactly, some of them are. So here's what I would say. If you're looking for a kind of vision as to who Bernard Arnault is, I would say this: go to YouTube, because CNBC has produced a huge series called The Brave Ones.
Yes.
And what they've profiled is all of these big risk takers over the course of business history. Bernard Arnault is one of them. So go to YouTube. Just search CNBC, The Brave Ones, Bernard Arnault. There's a 26-minute documentary of him, in his own words, and Lloyd Blankfein describing him, and Anna Wintour describing him. You'll get a really good color.
And yet, despite all of that success, apparently sources close to Tiffany say that they're likely to reject the deal.
Yeah, so one thing I would say from a shareholder perspective, the shareholders are, I think, a little above their skis today because this share price is now over 130, around 130. His offer is 120. The one thing about Arnault is he does not overpay. You say, well, it's a rich company. He's the richest guy. He is very disciplined about price.
That is how you get rich.
If he feels like he's being cornered or going to be forced to pay something, he'll back off.
Right.
And then where is Tiffany going to be left?
Right. The less Tiffany shareholders like it, the more you think, he's probably onto something.
Right.
All right. Before we go, a good fit. Sources say to CNBC that Alphabet has made an offer to acquire Fitbit in an effort to get into the fitness tracker and smartwatch business. So on the one hand, you have this big luxury kind of jewelry play. On the other hand, you have Fitbit shares, which have been cratering over the last couple of years. They are soaring about 30% today. The stock hit an all-time high. This is Fitbit of $51 in 2015, and there it is at $5.50 right now, given all the competition out there. Is this another opportunistic play for a hard-hit name?
I wonder if it's too little too late at this point, though. Apple already has so much global market share in the wearables and
their watch.
Yeah, I hate to be wearing the watch at the very moment, but I mean, when you go to the gym, everyone's wearing an Apple Watch. That's a strong suit for them, and so you wonder for Fitbit. I mean, you don't even really hear a lot about Fitbit.
So Alphabet, which is has such a cutting edge on research and development, they're inside the home and all. Is this them saying instead of building it, we're just going to acquire it and then maybe enhance it?
Acquire it on the cheap.
Yeah,
I mean, this
super
was
cheap.
At the peak market value you mentioned, it was a $10.7 billion company. With today's move, it's closer to like $1.5 to $2 billion. So you're buying it at the lows at this point here. What's also curious about this is we talk about Google, data company. Yeah. They love data. Right. And if you have Fitbits who are tracking all of this type of stuff, is there a way that they can finally collect all of that and then harvest it?
Does Google even have a watch right now?
They did. They tried and then they pulled it, but they have a great operating system, so they need something to plug it into. Fitbit needs an operating system to plug into. It works for just what we need. Google to have more data about us, right?
But I got to tell you, I got this Apple Watch I got last week, and I'm obsessed. It's like my favorite thing I've ever owned. It's
I know.
So I can see why that Google must be looking at this and saying we need to get in here now. I was going to say a foothold. They need a wrist hold.
There you go.
In this space, guys. Thank you, Dom Chu, Rahel Solomon, Robert Frank. Coming up, Allbirds was born online but has steadily expanded its brick and mortar footprint. We're going to talk to the CEO about that strategy and the potential for an IPO next. And also take a look at shares of the S&P Value ETF. This is ticker IVE, and they are at an all-time high today. Among the top performers is AT&T, as Dom mentioned, which is on pace for its best day since July of 2017 and is also the most searched ticker on our site today. We're back in 2.
As a principal, I can tell you this.
At first, we were worried about using purple bricks, but since we sold with them, I haven't been able to stop going on about them, have I, dear?
No, love.
I've been telling everyone. Family, friends, that confused guy at the supermarket.
Yeah, you haven't really shut up about that.
But seriously, did I tell you about our purple bricks estate agent, Michael?
I met him too. He was nice.
We could talk to him whenever. Anything we asked, he could do it.
That's enough now,
He
dear.
was brilliant, always available to chat on the phone.
Enough,
I
Robert.
could email him any time of the day or night.
Purple bricks. You'll be totally sold.
Fixed fee payable on instruction or after 10 months. Viewing services cost extra. See website for more details.
Hey, it's me again, the TV. Since my family gave me Now TV, there's no more endlessly searching for something they want to watch, because now I don't do filler TV, just killer TV. If my family want crime dramas, I've got loads, and they're never going to guess who did it. Horrors, no problem. It's not real, it's not real, it's not real. Or how about dramas? OMG, I've got Chernobyl. Now they can watch whatever they're in the mood for.
What's your TV got for you tonight? Now TV. 18 plus, month passes auto renew, terms apply.
Carl's All Change Casserole. So, Chloe walks in from school, tears all over her face.
Daddy,
She says,
I don't want to eat animals anymore.
I blooming love my meat, but not as much as I love my little girl. That's why we've made some changes to our old favourite, sausage casserole. Now with meat-free Cumberlands, but still with my magic touch, a dollop of mango chutney. Just as tasty as it used to be.
Better, actually.
Make your own with the new Tesco Plant Chef range. Food Love Stories. Brought to you by Tesco.
Major League Baseball postseason is in full swing, and TuneIn Premium puts you at field level for every...
And it's a home run.
Single...
And goal!
game.
And that gone, a home run.
With TuneIn Premium, catch every pitch of every inning of every Major League postseason game until the final out of the World Series.
0-2 pitch, little half swing, and it hit.
At home or on the road, Major League Baseball's postseason action is on TuneIn Premium.
And that ball is gone.
Upgrade today.
Welcome back to the exchange. Shoemaker Allbirds was born and raised as an online retailer, but the company is deciding to expand its physical footprint, a move that seems contrary to where many think the retail world is headed. So why now, and what is it telling us about the consumer? Let's welcome Tim Brown. He's the CEO and co-founder of Allbirds. And Tim, it's good to see you.
Good to see you too. Thanks for having us.
Absolutely. So tell us how many stores you're planning to open and where mall-based retail can work.
We've got nearly 15 stores at the moment, 14 soon to be 15, and we'll add 20 stores next year. Many of them are in the States. We've got some overseas in China and the UK and in New Zealand. And we're hugely excited about the channel. We're seeing it's a great opportunity for people to touch our product, to try our product, to learn about the provenance of our materials and our material innovation. And we're extremely bullish about the potential of growing the channel.
Do you think there's any limit on how big you can get as a direct-to-consumer company? Because I know you've had skirmishes with Amazon, for example, over some copycat products. Is that a governor on your growth at all?
I don't think so. I mean, we're in a competitive space in footwear, but look, there's 20 billion pairs of shoes a year made on average, and we're still very, very tiny. We've got enormous potential to grow and continue to grow, but to do that, we're going to have to continue to innovate, and we continue to be good. And the retail expansion is part of it, as is international. But at the core for us, it's about product and it's about material innovation, and we'll continue to make our focus on sustainability and the use of sustainable materials our key differentiator, and we think we've got an enormous runway to continue to do that well.
Yeah, no, people love your product so much, I'm sick of hearing about it, but that's the ultimate differentiator in the long run. I wanted to ask, as you grow and look at the market, how you consider your options for an IPO versus a direct listing, which reportedly here it says you guys were profitable in 2016 and 2017, so maybe something like that could be an option. We have a special purpose acquisition company, a big space, a way of going public. How do you weigh those different methods of maybe ultimately getting this company in the hands of the public markets?
Yeah, the short answer is at the moment we don't. And I'm flattered by the question. We're still not even 4 years old, so it's very, very early days for Allbirds and what I believe we can achieve. I've never felt better about the business and the team that we're building in San Francisco and overseas, but it's premature to be thinking about that. One day down the road, possibly, but at the moment we're focused on execution and growing our business in a really, really sustainable way. We've been profitable from the beginning. We've been careful and measured in our growth, and we've raised some money to fuel that growth, and we'll continue to be very, very careful and methodical in the way we build the business.
What about those who love the product and say, but I want to be an early investor? Look at what happened with Uber and some of these others. All the good growth, the early stage stuff, we couldn't access that. We were shut out until it was too late, and then the excitement was gone.
Well, maybe one day soon is what I would tell them. Look, I mean, I just think we've got a long, long way to go, and it's something we're not thinking about at the moment. Our thoughts are occupied with taking Allbirds to China and continuing to grow it in Europe, where we're seeing great success. As we've touched on, the retail stuff is really, really important, and maybe that happens to us one day. Maybe it doesn't. At the moment, it's not something we're talking too much about.
Tim, can you leave us with any teasers about other product lines that may be next to come? I know you're working on socks and apparel.
Yeah, well, look, we've started with socks and had an amazing reaction to that. It's the beginning of what we think can be a larger sort of story around apparel, and we're building to that. And hopefully 2020 will be a year where we can start to roll that out more. I think the other key thing for us is continuing to innovate around the topic of sustainability that feels more important now than ever. We're a B Corp. We're a carbon neutral business, and we continue to think showing that you can build a profitable, successful business that is also thoughtful and kind to the environment at the same time, I think is a big part of our story, and hopefully we can be an example to others Amazon and the like.
Yeah.
Making things in a better way is a really, really important thing to do.
Yeah, I'm just impressed you pulled off the transition from professional athlete to CEO. It is successful insofar at that. Tim, thanks very much.
I really appreciate you having us. Thank you.
Tim Brown is the co-founder and CEO of Allbirds. Coming up, Argentina has a new president with a familiar and controversial face as his number two. Can they bring the country back from economic crisis? We'll have the latest and what it means for investors next. And take a look at shares of Spotify, which are on pace for their best day ever. The company posted a surprise profit and better than expected monthly active users. Shares of 14% nearly. We'll be right back.
Hey, it's me again, the TV. Since my family gave me Now TV, there's no more endlessly searching for something they want to watch, because now I don't do filler TV, just killer TV. If my family want horrors, no problem. It's not real, it's not real, it's not real. Or crime dramas, I've got loads. And they're never going to guess who did it. Or how about dramas? OMG, I've got Chernobyl. Now they can watch whatever they're in the mood for.
What's your TV got for you tonight? Now TV. 18 plus, month passes auto-renew, terms apply.
Watford, there's nothing like coming back to a warm home after a long day at work, especially when you've been stuck at a cold train station in rush hour for what seems like an eternity. Luckily, with Hive Active Heating, rated 5-star on Trustpilot, you can turn your heating on from wherever you are. And now with our new Hive radiator valves, you can even control your heating room by room. Search Hive Heating to buy now. Hive services require broadband and Wi-Fi. Terms apply.
How can I help you?
Just a latte, please.
Grande. Guatemalan bean.
Oh.
Hazelnut syrup.
Wow.
Whipped cream.
All right.
That's $5.25, please.
Oh.
You can't always control what you spend, but you can save as you spend with Save the Change. When you use your Lloyds Bank debit card, we'll round up the amount to the next pound and transfer the difference to your nominated Lloyds Bank savings account. Feel in control every day with our mobile banking app. Lloyds Bank, by your side. T's and C's apply.
Major League Baseball postseason is in full swing, and TuneIn Premium puts you at field level for every...
And it's a home run.
Single...
And gone!
Game.
And that gone, a home run.
With TuneIn Premium, catch every pitch of every inning of every Major League postseason game until the final out of the World Series.
0-2 pitch, little half swing, and it hit...
At home or on the road, Major League Baseball's postseason action is on TuneIn Premium.
And that ball is gone.
Upgrade today. Hey NFL fans, can't watch the game? Can't be there? We've got you covered. With TuneIn Premium, you can hear every NFL game live as it's happening, or catch it later on demand. Anytime, anywhere, all season long.
Couldn't. Here's a swing and a drive deep to right field. Looking up. Goodbye, baseball.
Between game-winning shots and walk-off homers, follow TuneIn on social media to discover the latest and greatest in live sports.
With the 24th pick in the 2019 NFL Draft.
From live reminders that the biggest MLB games are on the air, to recommendations of the best new sports talk shows and podcasts.
He's going to be fine. He's going to be good right away in 3 years.
Follow at TuneIn on Facebook, Twitter, and Instagram to get the most out of TuneIn.
Welcome back to the exchange. Argentine stocks are down now after getting a nice bump earlier today following the country's election over the weekend. This is the country in an economic crisis, and the question is, does the new president have the right tools to fix it? Seema Modi joins me with more.
Yeah, critical election, Kelly, that happened over the weekend. Alberto Fernandez, a 60-year-old law professor, is the new president of the country, and he inherits a country that is in the midst of an economic crisis that's really telegraphed in the country's currency, which is down 30% this year. It's in a recession. And the main task at hand for Fernandez is to renegotiate a deal with the International Monetary Fund. Back in September of 2018, Macri, the former president, got this $57 billion credit line. The next installment of $13 billion is due in early 2020, but the IMF is playing hardball. They're saying, Argentina, get your economy together, reduce spending, reduce the deficit, or we're not going to get you that next installment.
But is this, so a couple of questions. One, is this the right leadership now, including the Vice President, Christina Kirchner, who's back?
Yes.
Is this the right team to do it? And What about the hedge fund exposure here? This has been a major avenue where people bet on this rebound under Macri, and now what?
There's certainly a tie here to Wall Street. A number of U.S. hedge funds that had exposure to Argentina's debt back in 2001 when the country defaulted have exposure this time around. Reportedly, Autonomy, Centerbridge, among others, are holders of Argentina's debt. So that will be another big challenge for Fernandez. How does he restructure the country's bonds? Does he issue a haircut with the help of the IMF or extend the duration of the country's bonds? That will be a big story for a lot of Wall Street.
Like a haircut in disguise.
Yeah, exactly.
Either way, big ramifications. Seema, thanks. Appreciate it. Seema Modi with an eye on that election for us. Coming up, the second largest mortgage lender in the country is having a record year. So what does that tell us about the state of the housing market? We'll ask the CEO of Quicken Loans right after this.
Hurry to TradePoint. 3 for 2 on flooring and tiles ends this Sunday. Plus, if you have a loyalty discount, you'll get this on top. Don't miss 3 for 2 on flooring and tiles at TradePoint. Excludes cut-to-measure flooring, flooring accessories and underlay. Every third item per single transaction in descending price order free. See tradepoint.co.uk.
Did you get the milk?
I bought brie, fish fingers, and washing up liquid.
You went out for milk.
I won't be long.
You can't always control what you spend, but you can save as you spend with Save the Change. When you use your Lloyds Bank debit card, we'll round up the amount the next pound and transfer the difference to your nominated Lloyds Bank savings account. Feel in control every day with our mobile banking app. Lloyds Bank, by your side. T's and C's apply.
Trick or treat!
Oh, sorry, this is a Vauxhall Network Q retailer.
But your sign says no tricks, just treats.
Well, yeah. Treats like a £1,000 deposit contribution on an approved used SUV at 9.9% APR representative.
I'm telling my mum.
Well, get her to hurry. Offer ends on November the 4th. And don't forget our 1-year warranty and roadside assist. No tricks, just treats. Search Network Q. Because buying a used car shouldn't be scary. Personal contract purchase, subject to status, T's and C's apply. 18 plus only, Vauxhall Finance.
Major League Baseball postseason is in full swing, and TuneIn Premium puts you at field level for every.
And it's a home run.
Single.
And gone.
Game.
And that gone, a home run.
With TuneIn Premium, catch every pitch of every inning of every Major League postseason game until the final out of the World Series.
0-2 pitch, little half swing, and it hit.
At home or on the road, Major League Baseball's postseason action is on TuneIn Premium.
And that ball is gone.
Upgrade today.
Touchdown, Minnesota. Grabbed by heavily covered. Dives into the end zone for the touchdown.
Tonight, TuneIn has your Monday night NFL football with the Miami Dolphins at the Pittsburgh Steelers. Kickoff at 8:15 p.m. Eastern.
Quick throw out to the side. Taysom Hill across the goal line. Touchdown.
But Robbie's got an airborne. Robbie Gold's field goal is good.
At home or on the go, hear the home and away call of every NFL game this season on TuneIn Premium. Upgrade today.
Couldn't. Here's a swing and a drive deep to right field. Looking up. Goodbye, baseball.
Between game-winning shots and walk-off homers, follow TuneIn on social media to discover the latest and greatest in live sports.
With the 24th pick in the 2019 NFL Draft.
From live reminders that the biggest MLB games are on the air, to recommendations of the best new sports talk shows and podcasts.
He's going to be fine. He's going to be good right away in 3 years.
Follow at TuneIn on Facebook, Twitter, and Instagram to get the most out of TuneIn.
Welcome back. Sales of existing homes dropped in September, with realtors blaming a combination of low supply and rising prices. The typical existing home price jumped by nearly 6% last month. That's the biggest surge since January of 2018. All this despite mortgage rates remaining under 4%. For more, let's bring in Jay Farner. He's the CEO of Quicken Loans, and they are the nation's largest mortgage lender in terms of the number of originations. Jay, it's good to have you. And first of all, is the housing trend overall looking robust to you, or still a little anemic?
Good afternoon, Kelly. Thanks for having me. You know, it feels robust to us. The number of folks applying, even in the fall, for mortgages to purchase a home, especially first-time home buyers, has been really strong. So I would say it's still looking very good.
How much of your success is because of technology? We obviously see the Rocket mortgage ads all the time. I think you're working on something that would speed up closings as well. How significant is that in taking share?
Yeah, I mean, that's been really our secret sauce, our culture, our team members, and our technology. And it's not necessarily the speed to close, it's really the certainty. So whether we're working with a client on a refinance or a real estate agent with a purchase, they want to be certain that we're going to close that mortgage. And so that's where we've really leveraged technology, getting the information, the data that we need to get a full loan approval. And I think that's really what Rocket Mortgage, that's how it separates itself from a lot of the other experiences out there.
You know, that raises some questions about the underwriting process, especially because echoes of 08 still loom. But more interestingly seems to be this push to get mortgages to more people. We saw Ben Carson on this morning talking about that at HUD. Is there going to be an effort to say, hey, it's still too stringent of a process, and what are some ways of overcoming that?
Well, when you look at technology and data, actually you'll find that the loan quality is up. So when you're bringing data directly in from employers or from banks, the amount of fraud is greatly reduced, which is helping to strengthen mortgages, actually keep rates low. So that's a good thing. Now, when you're talking about overall housing, one of the things that we're thinking about are, should we look at the guidelines differently? Is there a way to think about additional sources of income? I'll give you an example. Airbnb. People are renting out homes in their home. Can we use that income? So as the economy changes, it's important that guidelines change to support people who are kind of taking care of taking part in the gig economy. So it's not a quality issue. Quality is probably at the strongest level it's ever been. It's really a guideline, a time to relook at guidelines, and should we be changing those based on how our economy is changing?
Yeah, absolutely. Jay, I appreciate it very much. Thanks for your time today.
Of course, thank you.
Jay Farner is the CEO of Quicken Loans. Again, they're the biggest mortgage originator in the country in terms of volume. That does it for the exchange today. Thank you so much for joining me. It is time to go join Tyler and Melissa for Power Lunch, which starts now.
Kelly, thank you, and we will see you over here in just a moment. Welcome, everybody, to Power Lunch. I'm Tyler Matheson, and here's what's new at 2. Record highs today. The S&P 500 eclipsing its all-time high from back in July. The Dow just 1% away. NASDAQ close as well. Can anything get in the way of this rally? Plus, clash of the cloud titans. Microsoft using its force to win the $10 billion so-called Jedi contract from the DoD over Amazon. We'll tell you what it means for those two stocks and more. Later, the online resale market is heating up. Maybe you've heard of the company Poshmark. Well, the payouts have now doubled to reach $2 billion. The CEO will be here to weigh in on that hot marketplace, the strength of the consumer, and that company's road, perhaps, to an IPO. Power Lunch starts right now.
Welcome to Power Lunch. I'm Melissa Lee. It is a record day on Wall Street. The S&P 500 notching new highs, as Tyler had mentioned. Both the Dow and the NASDAQ are in striking distance. The NASDAQ, in fact, just about 13 points away from that record mark. And check out some of the Dow components hitting all-time highs in today's session. Microsoft on that Jedi contract. Apple at a number of price target increases. United Technology and JP Morgan's jumping as well. Kelly.
All right, Melissa, thank you very much. And for more on what's sending stocks to new records today, let's go to Bob Bassani at the New York Stock Exchange. Bob?
And 3 things, Kelly, that are really mattering right now. Number 1, trade talk optimism. Number 2, the Federal Reserve likely cutting for the 3rd time this year, this week. And finally, the consumer holding up really well. And I really think that consumer holding up is the key to all of this. I looked at the earnings calls for the 40% of companies that have reported so far. Very clear. The U.S. consumer is holding up very well, and there is no particular concerns about a recession in 2020. Look at Richard Fairbanks. He's the Capital One CEO. I think the U.S. economy and the U.S. consumer is in pretty good shape. He echoed many bank CEOs that I heard about in the conference call, essentially saying the same thing. As for recession concerns, Harris Simmons, he's the Zions Bancorp CEO. I think he summed it up. We don't see any indications of a broad-based recession on the horizon. Consumer holding up, no recession talk. That's why we're at new highs right now. If you have a complaint right now, Kelly, I'd say, well, since the last time we hit new highs, look, the leadership is defensive sectors like REITs, utilities, and consumer staples. We need to get other cyclical groups, the industrials, the materials, the energy. These are the ones that are all lagging to lead, and I think we need a resolution of the trade war to really get that happening. Back to you.
All right, Bob, thank you very much. So as we do hit all-time highs, Is there anything that can stop this record-breaking rally into the year end? Let's bring in Lori Calvasina, head of U.S. Equity Strategy with RBC Capital Markets, and Jim McDonald is Chief Investment Strategist with Northern Trust. Welcome to both of you. Jim, you say you are positive on risk-taking into year-end 2020. That's a long way from now.
Well, Tyler, stock market records, which we're talking about today, are made to be broken. We think that the economy is showing good resiliency. We should see earnings growth start to resume into next year, add dividends and buybacks, and you've probably got a mid to high single-digit return for the equity markets over the next 12 months.
All right, and Lori, you're a little more cautious. You see zigging and zagging through year-end. Your price target on the S&P is a little lower than it is today, actually.
Yeah, so we consider ourselves to be pretty neutral through year-end, and we've said don't rule out another pullback before year-end. If you look at what we've seen this year, it's essentially a rally off a growth scare low that we put in last December. And when we've seen this in the past, off the 2010, 2011, 2016 lows, we've tended to get quite a few pullbacks of the 4 to 10% caliber. So we think we could be setting up for another one of those.
The pullbacks cause would be?
Well, we don't like valuation. So that's the first thing that we've been pointing out is if you... Too high. And what we actually pointed out last week was if you look at the forward PE multiple, we're actually starting to bump up against getting pretty close to levels that we've peaked out previously in this cycle. And we've seen that already on other metrics like price to book and price to sales. So what you have to assume is the good news and, this list that we just went through, the healthy consumer, some progress on the trade war, we think a lot of that is already baked in.
Jim, what would you say Lori is missing, if anything, at this point?
I don't think valuations tend to be a hurdle on short-term market action. A lot of the concern about PE ratios tend to be looking at them on an absolute basis. We're in a very low interest rate environment. The other thing I would say that might be missing from that analysis is how cautious investors really are. There is not a lot of euphoria in the markets. You look at what's happening with fund flows, you talk to clients, there is still a fair amount of risk aversion. And I actually think the struggle that some of the unicorns are having in going public is a good sign showing discipline in the public markets that indicates we are nowhere near a euphoric type of environment, which would be a more worrisome signal.
I saw one story about the level of bearishness right now is quite high and bullishness is quite low. Jim, let me drill on one of the topics which I know is of concern to you and pretty much every investor, and that is trade. Will a phase one trade agreement, whatever that means, be sufficient to satisfy the market that the trade collision between the U.S. and China has been mitigated or taken out of play as a major risk to the market?
Potentially. The benefit of the phase one deal is the deferral of more tariffs on the way. The actual substance of what's being talked about, $20 billion in agricultural purchases, that's what they've averaged over nearly the last 10 years. They actually bought nearly $29 billion annually in 2012 and 2013. So the details don't look all that great, but deferring greater tariffs coming on is something that the market likes.
Lori, if you're worried about valuations, why do you like utilities? Some would argue that that is a sector that is, in fact, overvalued.
So we think it is a little bit overvalued, but when we look at its multiple relative to the S&P, we find it's still well below past peaks. So we think that's one that has started to move up, but there's a lot of room to run. By contrast, something like consumer staples, we actually pulled our overweight off there recently because we thought we had gotten back to peak valuation.
If it isn't valuation that trips the market, what else could?
Well, I think we have to consider the trade war itself. I do think a lot of this good news has been baked in. We actually have a basket of stocks where we have evaluated who's most and least at risk from the trade war. And in this last big leg we've seen higher in the market, those trade war sensitive names have outperformed. We've also said on the trade war, if you look at the sort of mini deal that's been discussed, what's actually going to happen that could restore business confidence? I haven't heard a lot in these discussions that's going to tell me corporates are suddenly going to start feeling better and spending a lot of money on CapEx. I mean, we know that's already been moderating. We know they're already reining in buyback activity a little bit. So I think the hurdle from here is actually pretty high.
All right. Lori, thank you very much. Lori Calvasina and Jim McDonald, thank you as well.
Well, more than a dozen wildfires continuing to rage in both Southern California and Northern California today. Across the state, hundreds of thousands of people have been evacuated from their homes, and millions are without power as PG&E and Southern California Edison are using planned power outages in an attempt to reduce the risk of fire. Both those stocks, as you see, are down today. Jane Wells is live in Healdsburg, California, north of San Francisco. Jane.
Yeah, look how still it is right now. Right up here right now, it's going to give firefighters maybe 24 hours to try to get a jump on this fire up here. But I want to show you what's going on down in Southern California. New fires breaking out today, especially one on the west side of Los Angeles along the 405. Some of the most famous people in Hollywood were forced to flee their residences this morning. Here's the latest map of active fires across California. And up here where I am, the Kincaid fire, it doubled in size overnight, over 66,000 acres. And while it's calm right now, they say more winds are coming.
What we're starting to get ready for, though, is another red flag event. Right now, it looks like that's going to start sometime midday Tuesday and push us into Wednesday morning. So we've got a kind of a quiet 24-hour window right now, and then we're going to go into another critical period.
And so people are dealing really not so much with the fire as with the intentional power outages. Yeah, you have 186,000 people evacuated. That's huge. You have more than 2 million people who've been without power. They've been making do. And PG&E is saying for a lot of those people, it's not going to be worth it to try to turn the power back on today and then turn it back off again tomorrow when the winds come again. So some of them, my daughter who lives in Pacifica, right along the ocean, she says her power is going to probably be out till Thursday. Back to you.
All right, Jane. Thank you, Jane Wells.
Coming up, Microsoft beats Amazon in the clash of the clouds. Is this one small deal actually a really big one? We're going to have more on that story. And a $14 billion offer for Tiffany. Is this just the beginning? Will more offers for Tiffany and other retailers now start rolling in? Power Lunch. We'll be right back.
1 in 10 Londoners surveyed said they'll give more to charity in the next 12 months. Are you one of them? At CAF, we help generous people like you support their favourite charities by making giving simple. And we provide charities with the tools they need to perform at their best. So together, we can make a bigger difference for our communities. We're a charity and a champion for better giving. We are CAF, and we make giving count. Visit cafonline.org to find out more.
At first, we were worried about using purple bricks, but since we sold with them, I haven't been able to stop going on about them, have I, dear?
No, love.
I've been telling everyone.